where we get into the manic phase where real estate's doing horrible, stocks are falling, we don't know what the dollar's going to do, and all of a sudden there's this big rush to precious metals by everybody. Silver is probably the most strategic metal in existence. It doesn't take a lot more buying to start moving the price higher. So we could see a correction here in gold, and enough of one to scare the early adopters out.
Silver, that's what we're going to be talking about today. This whole episode is really going to be focused on silver because Russia's buying. There seems to be some kind of a resistance in the silver price. And I wonder, is that manipulation based or is there more upside to it? I also know, though, David, that you've been calling for higher prices for a while now. So I want to see why maybe you think this time is different because, again, it hasn't happened. Silver's still below its previous nominal as well as inflation adjusted all-time high. So there's still a lot of work to be done and loads of things to talk about. I also want to talk to you about silver stocks because we're finally seeing some silver M&A, and that's going to be interesting to talk about. And then right after my conversation with David, for everyone listening, I'm talking to two companies. One of it is a small cap gold miner. It's a new company, just got listed. So first time I'm talking to them. That's going to be that's going to be an in-depth conversation with Borealis Mining. And then I'm talking to Aurania Resources, or actually Aurania. They might have to change their name soon. Who knows? We'll see. But that's a gold exploration company that just made a very interesting nickel discovery on a beach in France. So loads to talk about there too. This is going to be a very lengthy episode. And I want to focus on silver in this conversation with you, David. And particularly because I listened to a few of your recent interviews in preparation for this one. And I understand your bullish demeanor and I understand your reasoning behind having a bullish demeanor to begin with. But is all of this going to be enough, though? That's kind of what I'm wondering. Like, is what's happening right now enough to finally get silver to those higher prices, or at least surpass the previous nominal all-time highs? Because again, I've been hearing bullish predictions since I started paying attention in 2018, and granted, silver has doubled since then. But some people have been paying attention for decades and hearing that whole same narrative for decades and those triple digit silver claims, right? They haven't materialized. So do you think now is the time where we finally start seeing it? Are we actually in the early stages of that, finally changing? And if so, why do you think this time is different?
I do think it's different, and I'll elaborate on that. First of all, I've been in the market for decades, as you probably are aware. And so I've been, joyful and gleeful and very distraught through the journeys through the silver market. I've had good luck, good fortune to be able to call the tops in this last bull market that started roughly around the year 2000. So that's been to an advantage to me and my readers. But what's different this time? So right now, the main thing that's different is you're starting to see silver and gold especially mentioned in the mainstream media. And that's an indicator that more and more people will become aware of it. At the same time that's happening, the asset classes that most people pay the most attention to, in fact, are inundated with, are real estate, stocks, and bonds. And they're all doing, highs or new highs as we speak, but the momentum is falling off rather rapidly. So there will be a time in the near future where those assets really aren't going up anymore or start to fall. And when that takes place, you'll see a shift. So you see an asset class movement. They call it rotation in the stock market. They rotate from like high tech to biotech to consumer goods to utilities or whatever. So we'll see a rotation in the asset markets, generally speaking, which means that real estate doesn't work as much, the stocks don't work as much. Well, where do you go? And really, the only alternative is cryptocurrencies and the precious metals. One further point I want to move on is that you're hearing a lot about the silver deficit now. Almost any commentator that's interviewed by you or our group, anyone, even in the general markets, ask about, well, what about this silver deficit? And what's so interesting to me about that is we had a massive deficit when I started, being in the speaking circuit, writing my newsletter, being in the public eye. And that started in 1990. I really started on the web about 1998. But 1990 through 2005 inclusive, for those 15 years, we were in a structural deficit for silver. We had 2 billion ounces of fine silver above ground in 1990. And in 2005, we had 500 million. We ate up from the above ground stockpile 1.5 billion ounces of silver in those 15-year periods. You can do the math in your head. The average was 100 million ounces a year, but it wasn't that exact. It ebbed and flowed. In the early years, it was a little bit of a deficit. In the middle years, it was huge, and then near the end, it tapered off because the mining industry started to produce more and more silver as a result of byproduct mining, because China had hit the big boom around the 2000. And so all kinds of mining took place for zinc, lead, copper, a lot of the mines that produce silver as a byproduct.
Hmm.
My point is this: we had this huge structural deficit, but no one knew about it or talked about it. And the price of silver hardly moved during that 15-year time frame. This time, there's a lot more awareness. So to answer the question in as simple terms as I can, all markets move on buying and selling pressure, which means you need new buyers. And so all the silver bulls that are out there that are holding or maybe buying a little bit more are kind of fed up right now. I bought enough. It hasn't done that much. I'm back even. Maybe they bought it at 30 a long time ago. And now they're even, but the dollar's depreciated in that time frame, so they're not really that happy. But now the new buying is going to take place. You have an industrial buyer that won't go away, regardless of an inflation, deflation, stagflation. That market stays pretty steady. And on top of that, you've got new buyers coming in the market, not only from the retail side, but from the institutional side. Pension funds, money managers, high net worth individuals, sovereign wealth funds, family offices, all these groups are going to start moving into the market with that rotation going into precious metals, and some of it will spill over into cryptocurrency. So it has changed. And what's changed is the awareness. More people are awake and aware of the financial system, how it works, and how they can mitigate the damage it's done with a currency that depreciates to its, as Voltaire said, to its intrinsic value.
Part of it is that actually, I mean, we have even big banks, like even Citi now is calling for silver buying and putting a $40 price target on it by the end of this year, which is what, about a 30% spike from here on out in what is just about 3 months. And that actually kind of that media phase, if you want to call it, or that awareness phase, it kind of makes me uneasy as an aspiring contrarian. Does it worry you? Like, could this be a contrarian signal where I believe we're at a 12-year high or something like that? Could this be a contrarian signal for silver to be taking a breather here?
Yes and no. I know I contradicted myself, but having gone through this market, when I was your age or younger, and knowing how it works or having a pretty good feel for it, is it's both. First of all, I know that when Wall Street gets behind the cryptocurrencies, it's almost a guarantee to go ahead and go along with them. So here we have Citi saying something about silver, for crying out loud. But at the same time, they're putting out that $40 call. They're probably technically aware, I'm sure they are, of where we are at this point in time. So people see that, so they lure in the people that are really not that savvy, see, oh, the mainstream's talking about, so I never thought of it. Oh, look it up. And I hear a couple of my interviews, maybe somebody else's, and say, oh my goodness, silver's undervalued, probably one of the most undervalued assets I'm buying, without any thought about timing the purchase, which is okay if you take a dollar cost average approach. But if you say, oh, silver's great, here's half my life savings, are going to throw it in the silver market, you don't want to do that. So there you are, buying based on what Citi wrote, and now they've taken the market down. So they might say 40, and they could be right, but on a short-term basis, it probably is take the contrarian view. But in the longer term, they're basically setting it up so that they're kind of ahead of the curve as this market really goes into the last and final phase, which I think will be about a year and a half, 2 years from now. Just educated guess, where we get into the manic phase where real estate's doing horrible, stocks are falling, we don't know what the dollar's going to do, and all of a sudden there's this big rush to precious metals by everybody, public and institutions.
I do want to talk about that, especially the timing part of it later on. But it also seems that when looking at the premiums on physical silver, so bars and coins, there seems to be little retail demand for silver right now. And most of the action apparently comes from larger players, according to Bob Colban on Twitter. It's a tweet I took out. Is that, does that seem true to you? Does that worry you that there's little retail demand for physical bars and coins?
Somewhat. I mean, Bob's exactly right. I mean, you can determine what it is just by looking at what the spreads are. In other words, if you go back, I don't know, a year and a half, a lot of people on the internet were talking about, silver is harder to get than I've ever seen, and it's very difficult. I've got some for sale, and the premiums were sky high, and people were really, getting ripped off on the spread between the spot price and the premium put on top of the spot price. That was a reality. The retail product, your 1 ounce coins, your 10 ounce bars, your 100 ounce bars, your kilo bars, all those were a pretty tight supply. So from that aspect, it was a truthful statement. But from the silver market, which was really the commercial bar market that's run by derivatives, that market was not in short supply. And so right now, those people that bought that, $25 silver paid a $5 premium and it's at 30. Now they're break even. They're kind of scratching their head. What do I do? I had to pay this huge premium. Now, if I sell back to the market, well, if they go to sell back, they have to take a discount in a lot of cases. So I really don't like the retail market at times. It annoys me, but I can't control it, nor do I wish to. But it's not always exactly in line with the true bigger picture, which is the entire market, which takes in the commercial side and the retail side. So I think we're going to see it work its way through, and it'll be okay. We'll see higher prices, and people that bought at a high premium will get that premium back. And to reiterate what you said, Antonio, is look, the retail market's pretty much dead. It's the big buyers that are coming in and buying silver for both industrial and investment purposes. And that's what's driving the market. It's basically paper driven, which with a fair amount of deliveries, as you'll probably talk about, Russia indicating they're going to take on silver. And of course, the Shanghai Gold Exchange in the physical side of silver and gold.
Exactly. That's exactly where I want to take this because it is on the topic of larger players joining the market. I saw this article on Bloomberg. It was retweeted, I believe, by Willem Middelkoop about an Interfax report about Russia's precious metals holdings, essentially claiming that Russia is going to buy a lot more precious metals, platinum, palladium, and even for the first time, silver. What do you think that means? I mean, them adding silver to that list for the first time, is it as big as the title makes it seem, or do you think this is going to be fairly minor?
I don't know. I think it'll be more than minor. How significant? Most of these larger entities, I mean, you look at like a money manager or a mutual fund or an ETF or any managed money with a professional, they know that you accumulate and over time and you distribute over time. In other words, you don't go into the market and make a big purchase and move the price, because a big buy or a big sell will move the price almost instantly. So they'll accumulate. So I don't know what their long-term plans are, but what I do know is what they know, and that is that silver is probably the most strategic metal in existence for a high-tech society, and they see that coming. So not only for everything that we have now, but the future inventions, maybe going to a silver-based battery for EVs, for an example. Samsung put out an article. There's a little bit of distortion on the web about that, but I won't go into it at this time. Regardless, there's more and more uses for silver all the time, especially in the battery market that no one's really that aware of. I mean, the reason, your pacemaker uses a silver-based battery and your hearing aid uses a silver-based battery is you want 100% reliability and you want long life. You want a battery that's going to be there for a long time. Lithium doesn't do that. So there's a lot of advantages, but silver costs more. But it costs more in the aggregate in the long run. If you've got to replace your batteries in your in your Tesla every so often, but silver goes on for 2 or 3 times as long a life, and you go through that over the time frame. Actually, silver may not cost as much if you use cost depreciation. So I got too technical here. Point is that there's a lot of uses for silver. So the old adage that he who owns the gold makes the rules. That may be true for the monetary system, But if you really think about it, and I'm just throwing this out for a thought experiment, but he who owns the silver owns the technical. I mean, without silver, you really are not going to be a technically viable country, nation state, city, whatever. So in other words, just again, as a thought experiment, if you were short on silver and you couldn't do the next generation tablet, for example, because you couldn't access that element, you would be looking to, someone that had it. Are we going to get that tight in the silver market? I don't know. But the way you ensure that you're not is to think ahead and buy ahead and warehouse what you need for, let's say, the next whatever months, years. And that way you rest assured that you do not lose the technological battle going forward.
Is that something that would happen over a kind of a reasonable time frame, though, or the short period? Because I'm not sure how close these technical innovations are. And based off this, the short excerpt really out of the article that I read, it felt like this is more of a monetary decision than it is an industrial decision that Russia is taking here.
Yeah, it's probably both. First of all, Matt Watson did a study on, where we're going from here. And he made some assumptions. Some I agree with, some I disagree with slightly. The first assumption is that the amount of silver that's going to be mined over the next 5 to 10 years is a steady state. It's about 850 million ounces mined on a global basis, with a roughly 150 million ounces recycled. So that turns into 1 billion ounces, not increasing or decreasing for the next 5 to 10 years. And then what you do is you look at what the innovations are that we know about. Nothing new that I just indicated, just the ones that we know. And you look at what's going on in solar, what's going on in the ethyl oxides, all the liquid silvers that are used. You look at the increase in electronics and all of that. And if you project that out and you look at the monetary demand as being steady, which I disagree with them, I think it's going to increase. We are in a deficit the last 4 years that will continue to increase. And in theory, let me repeat that, in theory, you're out of silver in about 5 years. So remember, I talked about the deficit between 1990 and 2005. That took 15. Right now, excuse me, we probably have about 3 billion ounces of silver in commercial bar form above ground. And at the rate we're projected to use, that could be gone as quickly as 5 years, not 15. Well, that's for industry and monetary demand. But as the stockpile starts to decrease, remember we talked about the very beginning, what's going to drive it, what's different this time is awareness. If people are aware, oh my goodness, look, the projected deficit was 250 million ounces for 2024, but it came in at 350 million ounces. It came in 33% higher than they projected. We're really eating up this stockpile. Hey, silver's a good investment. We're running out of it. Now, all that's somewhat theoretical, but it's also truthful to the best data we have right now. And again, well, what's different this time? Well, if that gets in, the Wall Street Journal or Forbes magazine or one of these bigger publications that's mainstream, it's going to wake up a lot of people to move into the silver market. So that's kind of it. And yeah, I think Russia's looking at it in two ways. Will silver ever come back into the monetary system officially? I doubt it. On an unofficial basis, it's already back in the monetary system. I mean, people like me will take, I'll take silver for my newsletter at a discount. In other words, if I'm going to charge you 500 fiat, you pay me 400 in silver, I'll make it equivalent to 500 fiat because I value silver over fiat. So I'll give you a discount. Many people do that. Many people will rent an apartment or rent a house or pay in wages or whatever. It's not a lot. I'm not talking about 10%. I'm talking probably about less than 1%. What I'm suggesting is that it's a trend, and those trends into the honest, sound money are a reliable exchange of value where you're actually getting value for value. Your labor is getting paid in silver. That starts to take meaning to people, especially, the newer generation. It's like, wait a minute, we're getting ripped off left, right, and center. We've overspent. We're getting, bills being pushed on us. What can I do to mitigate this? And one thing you can do to mitigate it is saving real money and spending fiat money.
But you don't think that silver is going to come back into the monetary system the way it was in before? But do you think other countries are also going to start buying silver, following into Russia's footsteps potentially, and like the US, but not only, like BRICS and whatnot? Do you think others are going to follow?
I think so. I think it'll take time, but I do think that they'll take a look at that. I mean, especially once the cat's out of the bag, a corny expression. But once more and more people are aware that, I've got all this gold that I'm using as a monetary asset, I can use silver. It doesn't have to be a monetary asset. You don't have to think of it that way. I would, but you could think of it as an industrial commodity that's needed in the future. It's already needed for us. For example, let's just take a thought experiment again. Excuse me, but let's just say that the South American countries that mine a great deal of silver say, we're not going to sell this silver because we realize that the oil supply over time is going to decrease and we need the electrical power. So we're going to use our silver for our solar panels in our country. So all of a sudden, their exports on silver is, let's say, 50% less than it was all previous years. Well, that would really, put a big damper in the silver market. And after all, they're mining it out of their country and they're using it for a useful purpose. In fact, the most important commodity on the planet is energy. So if they're going to use that silver to produce energy for their nation state, and what's to say they wouldn't, what would that mean to not only the supply of silver, but the awareness of silver?
Well, China has stopped buying gold now for 5 months, though, a period where allegedly they haven't been buying gold. Now, again, allegedly. But then on the back of that, there comes the stimulus bazooka, if you will. Do you think we're going to see a lot more buying out of China based on the industrial demand for silver from here on out?
Well, that's a tough one because they really have developed a lot of solar in China. And they're kind of at a point based on, the latest data that they may not need to add anymore the way their grid is set up. But that doesn't mean that they'll quit buying it. And they could be buying it for monetary purposes as well. We don't know. But, Russia and China are pretty much aligned in a lot of areas. And that could be one where China sees Russia buying silver as a strategic metal, maybe just as an investment. And they could, do it and maybe not, build as much solar as they're projected to do. I don't know. But what I do know is that it doesn't take a lot more buying to start moving the price higher.
What do you think this buying would do to the price, though, realistically? Like, where does it put it from here on out?
Well, technically, and technical analysis does work. It's not perfect. But once you get to a new high in anything, a stock or a commodity, what happens is a psychological event. Everybody that bought that silver at $30 and now it's at 35, almost all of them are going to hold it because now they're in the profit zone and they ask themselves, how high is high? It's only gone up $5 from where I bought it. David Morgan said in 2003, silver would go to 100. We're only a third of the way there. I'm holding. So that means that the float, as you would say in a stock, the amount of shares that are available to the market dries up. There's very little float available. Everybody's holding. So any new buyer has to go into what's available at the market to buy it. There's not much available, so they have to bid the price higher. So now it goes to $40. Well, now those $30 buyers might say, 40, I'm going to take a little bit of profit here. But a lot of them will just hold and say, how high is high? So there's nothing more bullish in a market than a new high. And what happens is, as the market goes higher and higher, everyone's holding, watching it go up, and they're in a profit zone. So they hold on to what they have. And now a new buyer's going into a less and less supply of available stock or available silver. And so a little bit of buying has a lot of buying pressure to the upside. And that continues till you get to the mania phase where FOMO sets in. And the fear of missing out, now that silver's at 50 and someone never said it, 50, it's probably going to stall out, but it's probably going to stall out, consolidate and go above 50 and start trading above 50 for the first time in my lifetime. And once it gets to 60 or 70, people are going, oh my goodness, what's going on with silver? And then there's a lot of people that are scared to buy because it's so high, but they'll buy a little bit because of the fear of missing out. So, they'll put $10 into, $100, $50, $1,000 into the silver market, and all those people late to the party will buy, and that'll force the price even higher. So I'm still bullish on the market. I mean, that's an outline of how markets move. Most people don't understand that. They're taught to buy low, sell high. There's nothing wrong with that idea, but they don't understand how a market goes ballistic or exponential or hits the hockey stick. And that's because the supply dries up because people are in a profit zone. They want to hold it. They don't want to sell it.
We look at that chart that often makes its way on my Twitter feed. The main stages in a bubble chart, kind of the four phases of a bull market, where you have the stealth phase, awareness phase, mania phase, and the blow off phase. Kind of goes with the stealth phase, that's smart money coming in, awareness phase, institutional money coming in. Do you think we're in that awareness phase? Because typically you have that's sort of where the first sell off comes in and it becomes a bear trap. So what I'm getting from you here is that if we do see a sell off for silver here, that will be the bear trap. That will be the awareness, the end of the awareness phase, if you will, getting into the media attention phase and then going towards enthusiasm, greed, delusion, new paradigm, and so on. Do you think we're in that awareness, institutional money type of phase now?
I do for gold. I know you wanted me to focus on silver.
Hmm.
I'm almost certain we're in that phase for gold. I mean, you look at what central banks have done, buying gold hand over fist for the last 2 years, setting records on their buying. But it's only started to spill over in the silver market in the last few months. Silver's riding on the coattails of gold this time. So I think it applies to silver, but not nearly to the level of gold. Gold, I'm almost certain that's the case. Silver, I'll stick my neck out and say, yeah, probably.
So what phase would you say silver is in?
I think it's in the early stages of the awareness phase, whereas I think gold is in the latter stages of the awareness phase where you can get the bear trap.
Because that bear trap would essentially be a good buying opportunity. If someone's listening, hasn't bought silver in a while, or wants to buy silver, hasn't bought any, what are you saying? What would you do? You're not saying anything because you're not
Well,
giving
I'll tell you what I put
obviously, but
out for my paid people, or I to put out to my members. I mean, I told them, I'm a contrarian. I do my own work. I'm not always right, but if you check the record, probably better than most. And a lot of my friends are technically saying, we're here, we're right at the top, we're ready to blow through. And I'm saying not yet. I think the market's going to consolidate here. I think we could get a bear trap. I think that on both metals, because they pretty much travel together, there's still like an 80% correlation that everyone expects gold to go up because the war problem with the Middle East, and of course the Ukraine thing isn't going away, and then we got the election that's uncertain. I mean, there's all kinds of fundamental factors to push the metals higher. And being in this market for decades, I know that that's the time it's going to pause, because there's so many reasons that everybody knows it should be going higher and it disappoints them. So we could see a correction here in gold, and enough of one to scare the early adopters out. I don't know how much that is, $100, $200, I don't know. $300, I don't know. But something along those lines, and probably not for very long, 2 months, maybe 3 months, maybe. Of course, I could be wrong, but that's what I see. And so I would say, save, look for that. Am I wrong? Could be. If I am wrong, then you just approach it differently. If it starts to run away, you don't chase it, you just average in. So you buy that higher high and that higher high and that higher high and that higher high, but at least you're not getting burned because you're using discipline. So if it goes from 30 to 100, and you buy it every month, let's just say it goes up $10 every month, which is ridiculous, but I can do it in my head. So you buy $1,000 at 30, $1,000 at 40, $1,000 at 50, $1,000 at 60. So now what you're doing is your risk is actually mitigating because you're adding less purchase, although the dollar amount's the same, you're buying less of the commodity or the stock, whatever. Because that's what you want to do. You don't want to add a big amount at the top of the market. As it gets higher and higher, you want to use less and less. And that's what dollar cost averaging forces you to do. But I really do think we're going to get at least a sideways movement here, maybe not a correction. I coined the phrase scare you out or wear you out. Everyone expects gold and silver to go up from here. And let's just say silver just can't get above 32 for the next 3 months. That alone will disappoint some people. They'll come back and say, well, yeah, so-and-so said it's going higher, and you said it's going higher, and the technical indicator said it's going higher. We're right at the cusp of going higher, and, it's not. I'm tired. I'm getting out of this market. I bought it 30 to 32. My dealer will give me 31.50 for it. I'm done. There'll be those kind of attitudes. So that's how I see it. Again, I've got a lot of experience. Does that make me right? No, not necessarily.
I can guarantee you that if people listening now scroll down to the comment section and look at the comments, there's at least one comment saying pretty much those exact same words there. But how do you see it playing out stepwise, though, David? I mean, from here to 50, realistically, how long does it take? That's maybe where your technical analysis comes into. How long does it take to get to 50 from here on out? What needs to happen? And then what happens after that when it goes to 50? Like, do we spike from 50 to 100, or is it kind of a stepwise again, as you mentioned, $10, or was that just an example?
Yeah, that was an example. The one thing about technical work is you really don't get a very good, some people do, they do cycle analysis. And I've only really met one cycle analysis guy that does pretty good on the time. In other words, from this time to this time is when you expect to peak. His name is Eric Haddock. I'll just tip my hat to him. But most of them are off base. I've studied it hard enough to realize that it's a very tough prediction to do. What I do know is that we will consolidate probably and break through the 33 level. And once we establish that as a floor support level, then it'll go higher. Eventually, it'll make it to 50. It'll probably stall out. Once it gets above 50, we don't know. But if things line up, stars line up, and we've got institutions talking about silver reaches a new high, it's almost impossible for the mainstream financial press not to print it or say it on their shows if silver gets to 50 and stays there. You know, print at 52, 53, 55. They almost have to report silver's at an all-time high. Now, on an inflation-adjusted basis, it's not even close to an all-time high. But on a numerical basis, it's a bigger number. It's 55, not 50. And so they'll have to report an all-time high, and this will awake people. And people that don't know anything about investing and taught buy low, sell high don't know that. Will just buy it because it's made a new high, which is actually safer than trying to wade through for years when it's at a low and was being frustrated for so long. So that will bring new buying in the market. As I said earlier, people that own it will be holding it. The people that have warehoused it, like let's say, for example, Russia, have warehoused, I don't know, a 2-year supply. When it gets to 50, do you think they're caring about the price? They don't care about the price at all. They care about the commodity. They care about their technological advantage over other nation states that weren't smart enough to hold silver in the stockpile. So they're not going to, they don't care if it goes to 1,000 because they need that to take on the technological needs of their nation state for the next decade or whatever they plan. So they don't care. To them, it's priceless. It's like buying something that you must have. It's like storing food. There's no food left at the shopping centers and you have a supply, you're in pretty good shape. But if you're waiting for the just-in-time inventory to show up with a truck, and the truck, the last truck going to the grocery store gets held up by some vigilantes starving to death, it's a whole different deal. Probably being a little dramatic. I don't mean to be, but what I'm trying to do is that people that understand how the world really works and that a price is just an arbitrator to mitigate who gets it and who doesn't. When you start not trusting the price because it doesn't matter because the commodity itself is so valuable, it becomes priceless. When you get that kind of a mindset, which is a huge shift, it goes back to what's different this time. When you get into that shift of consciousness, you got a different animal to contend.
Well, does it matter though how quickly it goes to 50 or makes a new all-time high, at least a nominal all-time high? Because if it does it between now and the end of the year, then sure, everyone's going to be looking towards silver. Everyone's going to be looking toward the silver equities, getting leverage and whatnot. But if it just slowly grinds to 50 over the next 5 years, is someone going to care? So does the timing matter here?
Well, yeah, I think I pretty much understand your question. First of all, the way I perceive your question. If it goes exponential, that's not what we want. Because anything that goes exponential basically falls down quickly. It's like the Jenga game. You're putting a little brick on top of a little one. There's no foundation. Any little movement, bang, the whole thing falls down. So when you're in an exponential spike, that greed, worry phase, the one you indicated for, how these bubbles manifest, you really don't want that. You want more of a stair step, steady eddy, what we call back and fill in the commodity sector. Goes up 2 steps, backfills, drops 1, goes up 3 steps, backfills 2, but it keeps steadily going higher and higher and higher over time. And it's got a good base, and it's got a lot of people that buy it in the 30s, and a lot of people that buy it in the 40s, and a lot of people that buy it in the 50s. When you do that, you've created a situation where it continues to go higher and higher without being vulnerable to a huge sell-off. It'll sell off from time to time. So you don't want an exponential. But 50 over 5 years, I would say, is much too small of a number move based on the inflation, the true inflation. So I'd say more like 100 or 150 over the next 5 years would be more like it. So you start seeing these moves in silver instead of being, a dollar move in a day, which is a huge move these days. But you get used to a $2 move or a $3 move. And then you get used to a $5. And then you get used. So that's what we want to see. Unfortunately, markets usually don't act that way, because what happens in almost all markets is you get into what you already outlined. You get into that bubble phase where that panic and greed sets in, especially if people think their currency is going to depreciate to zero. What's going to be worth? Are we facing a Venezuela situation where you won't even bend over in the gutter and pick up these pieces of paper because they're so meaningless and valued that they're not worth my effort to pick them up? And I'm not saying that'll happen in the US dollar, but when the belief is that it's getting to that trend where I don't know what this dollar is going to be worth 6 months from now, I'm getting out of dollars, I need to get into something else. And since the silver market is so small, that's a blessing and a curse, because since it is so small, there isn't enough of it at this price to make everyone happy. In other words, there'll be so little of it that is being tightly held in strong hands that to bid up what's left will take a very high price. And of course, that's just some people buying. Remember, the stock goes from $5 to $100. I mean, all the people that hold that stock and held it from 5, look at it 100, think about how wealthy they are. That stock's gone up 20-fold. But if they have a big position and they sell it at 100, like they have a huge position, that stock will move from 20 to 80 overnight, depending on how big a sale is on a one-day basis. So the pros know that. So they will just sell a little bit a little bit at the top, a little bit more, and see how much the market can take without moving the market off that high. But in the futures market, in the commodities market, it really doesn't work that way as much, because for every buyer, there's a seller, there's a zero-sum game. And once you start seeing the bank sell at the top or whatever, and there's nobody to buy it because you've already bought it at 50, 60, 70, 80, they're not buying more at 100. Then there's sells, and no one wants to buy, they'll drop the market. And that's true of wheat or corn or oil or any commodity. But silver is such a small market, it really can hurt both directions. It can move very, very high, very, very fast, and it can move quite rapidly to the downside. I think this time what's different is there will be a mitigating price, let's say an industrial price, or maybe with Russia, China, maybe Elon Musk starts to warehouse silver. Maybe Elon Musk buys some silver mines. Samsung buys another silver mine, that type of thing. And maybe you get to, I'll just pick a number. I don't know the number, but you could get to, say, $60 an ounce, where that's sort of like the industrial price that I'm willing to, 60 is a good price for me to make my refrigerators, my flat screen TVs, my DVDs, my components for semiconductors, my, computer chips, whatever, all that's in the electronic world. And I'm happy with that price. So I think it could go way up, spike, come down, but not fall to like where it started, like it did in 1980, where it could just mitigate that. Got to remember, in 1980, the all-time high was $50 for one day.
Yeah.
But the price a year before that was $6. So it went up 850% in 1 year. So you talk about getting rich quick, especially if you were leveraged, you could have done that. What was interesting is, even though we all talk about $50 silver, which is true, we're talking about a one-day event. But what almost no one really ever talks about or knows about is that the average price for silver for 1980 was $20 the ounce. It was $3 higher than the all-time high the year before. $6 was the high price. Maybe it was a little higher than that. I think it actually went above that. But regardless, it was in that range. Say it was 10. But it came back and traded for a year an average price of 20. So at least double what the high was previously by year. So I'm saying the same thing this time. If we get a parabolic move, it may go too high or overpriced or whatever, and then it comes down. but it comes down not to a low level, maybe half of the move or whatever. I don't know, but what I do know is how valuable it is to industry and actually to the monetary sphere as well, although most people don't agree with me, or some do. But that's regardless of that, it's going to have a floor that I think is much higher than it is right now.
I do want to talk about big companies potentially buying silver mines and maybe even the risk of nationalization if we get to those prices that you're talking about here. But just before we get to that, do you think because silver is such a small market, it's also prone to manipulations, right? Do you think that's if we get to these higher prices, that's when silver manipulation ramps up again and it kind of gets slammed down? Or will there be a time where maybe banks would think, if you can't beat them, join them and get on the long side of the trade and stay there?
I think it's the latter, because if you look at what's going on in the market as far as uncertainty, you've got $6 trillion sitting in money markets and T-bills and what's called ready cash. So if you take $6 trillion and you take 1% of that, you're looking at $60 billion. $60 billion represents the silver market, which is a $1 billion ounce market. At $30, that's a $30 billion market for one full year. 60 is 2 times 30. So 1% of the money sitting at rest, it doesn't know where to go, can take up 2 years of the total silver supply. So if you don't think when the next financial crisis hits that at least 1% of that money will move into silver, I got a Brooklyn Bridge to say. So I think that amount of capital, that small 1% moving into the silver market, represents 2 years total silver supply, will overwhelm any banking entities that want to make it short the market, because there just won't be enough. There could be enough paper to short it, but there won't be enough physical to fill the market with the demand for physical that they'll have to meet at some place. And even though it can fill contracts with paper, once that happens, game's over. Then everyone knows that they've defaulted, even though at law they've maintained their contract, because you can fulfill a contract with a check. But people will know they write me a check. They couldn't fulfill my order for real silver. So we're getting to a point that will be very interesting in the next few years. This is not going to happen a week from tomorrow. It's not going to happen by the end of this year. It's probably not going to happen by the end of 2025, but we're moving that direction. And again, 1% is not a big number. And I just outlined what 1% could mean to the silver market.
Is it time related or is it price related? Does it start happening once we hit say $100 or $150 silver, or does it just happen over time no matter what the price is?
Well, it happened over time no matter what the price is, because the inflation, the cost to mine it keeps going up. So right now, the price of silver tracks the production cost very closely. So if you go back a decade and a half, and the cost of mining was about $17 an ounce, silver is trading about 18. Now the price of silver to mine is about $28 and it's trading around 30. So just inflation alone will drive it up, because you can't grow wheat you can't grow wheat and make a profit. You're not going to grow wheat. If you can't, produce oil at a profit, you're not going to drill for oil. It's like any other commodity. So if the commodity's cost is $30, you better be able to sell for $30. You're out of business. So that alone could drive it higher. But the real juice in the silver market is that it was, and I think it will be, although it's debatable, will silver be the number one go-to asset on a high inflationary environment? It's always been so in the past. Will it be this time? I don't know. There's less education in monetary affairs now than ever. Everyone thinks money is just something that you have on your iPhone, and you waft it in front of the Starbucks barista and you pay for your coffee. They have no knowledge of monetary history and what happens to fiat systems and how the end of empires come about, or basically the loss of trust in government, which means the loss in trust of them to be able to exercise currency that has value, comes to an end. And so when that end game starts to hit the consciousness of people, and again, going back to my metaphor of, well, if there's an infinite supply of digits, what's the value of this this unit of silver, in a mathematical terms, it's priceless because if the denominator goes to infinity, what is it? I mean, you've got so many dollars out there that they're meaningless at sometimes. Back to Venezuela, the currency's in the gutters in the street, and 6 months before gladly grab as much as you could and go in and buy, clothing or buy some food or whatever. But now it's become so worthless, you don't even do it. You either have to use a US dollar, a greenback, or trade some silver jewelry, or fill in the blank, barter. And is the world going to that place? No, I doubt that highly. But that is what happens. That's how currencies are destroyed. And the trend is very clear. The $1913 now worth 2 cents. So now we're arguing about how long is that 2 cents going to remain? Is it going to remain for 10 years? Is it going to remain for 5? It's accelerating. And once you get into the psychological idea of inflation, it really doesn't matter what the inflation rate is. Hear me out. Because even though the inflation rate's gone down, we've already had that 8% or 10%, or really it's more like 20 if you do shadowstats.com. But regardless, people start to pay attention to their grocery bill, not what the government says it is. And they start to get fearful. And then again, it's the fear of missing out. It's not missing out on the silver price move. It's fear of how much food am I going to have next month? I better buy it now. I'm probably going to get more food for my dollar now than I will 2 months from now. And what that starts to feed on itself, especially with the shortages that are coming. I mean, I talked about the food crisis about a year before anyone else did. I mean, a few others did. David Dubine and I did a big podcast on that. Like I say, at least a year before anyone was mentioning, food shortages. But that's another mitigator. So you have a compounding effect where if you're not growing enough and the demand is higher, you're going to shoot the prices higher.
Yeah, the only time when I start getting afraid of inflation really is when I go to the US, go to a coffee shop, and then the barista turns around that little tablet and wants me to tip her 15, 18, 20, or 30% for a cup of coffee, which is it's kind of hilarious coming from this viewpoint, but that really is wild. And I'm thinking though, what does all this mean for someone like me who's trying to build, let's not call it wealth, but build, or you can call it that, trying to build wealth, trying to make money, trying to build up a portfolio. So I want leverage to this, and I want leverage to this whole thesis that you've been presenting here the past 40 or 45 minutes, David. And typically you go to look for that leverage in the stocks, right? In the silver stocks. And I look at the price of silver on a year-on-year basis, it's up 45%. I look at the SILJ ETF, so the junior silver ETF, it's up 51%. So it's basically tracking. Then I look at the SIL, it's up pretty much the same, 46%. So there's no real leverage really to get here out of the silver stocks. Do you think that changes once we move over to what you've been telling me about today?
Oh, it will change.
Hmm.
It will. Now, what happens is, first of all, everything you said is correct. I just want to, shout out that, I teach a different portfolio mix. We weight the portfolio and we put in, big money in big companies. So out of 6 companies, 2 of mine are making all-time highs. So you don't have the problem you just outlined. And that's with big money. So you put the little money, which would be in the 2 you recommended or didn't recommend, the ones you mentioned, are more on the speculative side. But what happens is the people that come late to the party don't want to buy silver at $50, but they look at, a silver stock, especially ones that are under $1, because they feel smart buying a cheap stock. And so there'll be a lot of money that goes into the junior mining sector later in the party as the silver price or the gold price continue to go higher and higher. So I was there already, as I told you. I mean, probably younger than you are now. It's like about 25 or so. And, silver and gold were going higher and higher. And I was talking to a guy, I was, in my 20s, he was like 40, and he was very resistant to the gold story, but I carpooled with him. So he heard the gold story on the way to work all the time. And finally, as gold really started to move, and silver as well, he decided to go ahead and buy some, gold mining company. So in those days, he took out the LA Times and the American Stock Exchange, which is a junior exchange. I mean, that's like the NASDAQ now. The amount of companies on that were very few. And he read through it and he saw this golden night and he bought it. It was a $2 stock. So he bought, I don't know, 1,000 shares of it or something. And it was within about 10 days, it was up to $4 and he sold it. Turned out Golden Knight was not a gold mining company, didn't make gold jewelry, didn't process gold. It was a women's lingerie company. But a lot of people bought it because they didn't have the research you have on the internet now. They saw the word golden, and because gold was in the name, they bought it. And I'm saying all that to say this, it'll happen again. Even though there is the internet to look it up, people will get in that manic panic phase. And really the truth is, if you want to buy silver at $5 the ounce, you want to do your homework and buy some of these companies because their metal in the ground is being valued at less than $5 the ounce. So you can buy a stock, which isn't like buying an option because you can hold it until you sell it, so you don't have to like worry about a time expiration on it. It's warehoused in Mother Earth, so you don't have to worry about storage costs. And so you're really doing yourself a favor. I really still advocate you should have real money first, spend your fiat, save, and you said wealth building, but I call it wealth preservation. You're not going to lose value. And in certain circumstances, like we're entering, it will gain in value. In other words, instead of buying, a dime, 2 dimes will buy you a tank of gas, 2 dimes will buy you, 5 tanks of gas or whatever. It will be overvalued at some point. And then the stocks will catch up to their true value. So you'll see if silver's at 50, they're not going to value silver in the ground at 50 because it costs to get it out of the ground. But it may go from being priced at 50 cents to $5. That's a 10 bagger. Usually at the top of the market, your asset in the ground is measured and indicated. It's called a resource in technical terms. Sells for about 1/10 the above ground. So if you have an asset that's on the spot market worth 100 million, in the ground, it's worth 10. That's a rule of thumb. Will it hold this time or not? I don't know. I've been in this market a long time. These rule of thumbs are just that. They give you a good educated guess. But again, if you want to catch the people that bought silver lower or gold lower, the way to do it is actually to do your homework on the mining company. That way you're buying it at these low prices.
I'm not a huge fan of the enterprise value to in situ value of the metal in the ground valuation ratio, if you will, because again, as you said, a lot of other things matter. The jurisdiction matters, extraction costs matter, metallurgy, and all these other technical things, they matter as well. And it also matters what management you have behind it and whether they're going to be able to realize that value on a takeout. Speaking of which, what do you think of the latest M&A where Core Mining is buying Silvercrest for $1.7 billion? Do you think that's going to kick off more M&A?
I think it'll happen. Silvercrest is in our list. I own it, just to be full disclosure. I like Silvercrest a lot more than I like Core. I'll be writing about that this week for our members. But coming back to what you just said, I probably should have qualified what I said. First of all, I agree with everything you said. First of all, a lot of these stocks will go higher in price, but they really don't have that much merit. But when I'm talking about the rule of thumb, I'm really talking about a top tier, producer. You use that valuation. I'm not talking about a junior that has a measured and indicated resource and is in a tough jurisdiction, whatever. But as a rule of thumb, but this is where you do, when I, as I said earlier, push the portfolio toward top tier, cash rich, unhedged mining companies or really royalty companies. And we've done quite well doing that because of how they work and how they're financed and what their costs are and all of that. But so I just want to qualify that because you can use it for a junior, but the more you go down the scale from top tier to mid tier to junior producers to rank speculations, the less valid that metric is. So I just want to make that.
Yeah. Yeah, I totally agree. Just to go back to the topic of M&A, are we going to see more M&A anytime soon? How do you see it? What else has to happen?
Yeah, I'm sorry to interrupt. Yeah, because it's cheaper to buy out another company if it's undervalued. If you do what we're talking about, say, wait a minute, I'm buying the silver for, X amount in the ground and I'm going to sell it for X plus, 50% margin. We're jumping on this.
Do you think we're going to see nationalization, though, in some of these less stable jurisdictions, if you want to call it that, because of silver prices going higher? I mean, if it goes to 150 from here on out, that's a decent spike. It's going to make the C2 value again much higher as well. Or some of these less stable, less mature mining jurisdictions going to start waking up and being like, oh, we want to have that to us. We'll take that asset off your hands.
Going to be tough. I mean, there's some people writing about it on the internet. And one, I can't rule it out entirely. What I can say is, NAFTA has been changed, but the basic agreement between these countries are still in place. And so that's a legal battle. What they could do, and I think is more likely, is that they'll put a windfall profits tax or some other, pick your nomenclature, and they'll probably try to mitigate it that way. So they're not going to stop a Canadian mining company that's dotted all the I's and crossed all the T's and is legally a viable entity that really supposedly secure and can't be broken by the contract, but they could alter it with putting a blanket 1 year extraordinary tax on it because silver's gone up in price so much. Nationalization, again, I couldn't rule it out. I doubt it. It really offers a lot of ill will toward the whole breakdown. But as the empire unfolds, as things mitigate, and there's a lot less one world order talk and a lot more me nationalization. It's my country, my people, my asset, and that's the trend that's already begun. My country, my people, my asset. You will start to see a move in that direction. It doesn't necessarily mean nationalization, but it could mean other things. And again, nationalization is part of it. I think we'll just see that trend. We'll have to see how it unfolds. I try to stay neutral on this stuff. Not that I don't have a dog in the fight. I do. I'm a silver and gold investor, but I also want to be objective. I don't want my bias to lean too far to either side. I want to be a very keen observer and see what's the most likely. And the most likely is the status quo, and then a change from that slightly one way or the other. It's not a big, oh my God, tomorrow we're taking over all of the mines or something like that.
Do you have any jurisdictions that you're completely staying away from, no matter how good the asset or no matter how good the cash flow of the mining company, where you're like, nope, if silver goes up a lot, they're going to hit it with a tax or something that's going to happen, so I'm staying away?
Well, when I was your age and I invested in the gold miners, there was nothing that beat the South Africans. I mean, if you start with a good South African early enough on, your dividends will equal the stock price. So if I bought, one of the Kafers in South Africa for $10 a share, it was up to 100, 120. I was getting $10 a share dividend. Nothing beat the South Africans. In fact, the late great Jim Dines used to have an expression all the way with ASA. ASA was on the New York Exchange, and it was a conglomeration of some of the top tier South African gold companies. I did not buy one gold company this whole time. I stayed away from it. I traded one once, and I told my members that I was going to trade the stock. I don't look at long-term hold. I don't like South Africa's jurisdiction. I'm scared of it, but I'm going to make a trade here on a short-term, gain basis. So yes, I absolutely did the opposite, basically, of what I did when I was younger in the first gold run, the big one, and just stayed out of it this time.
So, but right now you're not like staying away from Mexico or any other jurisdiction
Yeah, I'm warning about Mexico. I'm not staying out of it completely, but I'm letting everyone in, my membership know, and publicly, I'm saying it publicly to you, that if that's your only place, you're taking too big a risk. But if you're something like Pan American that has mines outside of Mexico, you're probably okay. Yeah, if one of their mines in Mexico gets a problem with, let's say, a mining strike, the mine's still there and they're not going to nationalize it. The miners say, hey, I'm not getting paid enough. The peso's becoming worth less. I need to get more. So they stop mining. That's not going to ruin the stock. But if you have a company that's only in Mexico, you want to mitigate the risk. I mean, if you've got a speculation, one of my biggest speculations is Mexico only. But I think it's worth the risk. It's so undervalued. As long as you know what you're doing and you, again, weight the portfolio correctly. And if you got $50,000 in the sector and 5,000 is in a rank speculation in Mexico, you're overweighted. But if you got 500 in it, yeah, you're going to be fine. You lose that 500, it's not going to ruin your life. Maybe 1,000, but you get the idea. But
Yeah.
if that stock goes where I believe it's going to go, that 1,000 may become 10 or 20,000. That's a nice gain. So you got to mitigate the risk to reward and know what you're doing. And that's why someone such as myself or many others can help you with that. Do we get it right 100% of the time? No,
Hmm.
but to get it right enough. The thing about speculation is you could be wrong 9 times in a row and get one right and make up for all those 9 losers if you do it correctly.
Yeah, if you have your position sizing right, which I suppose is another topic that we could dive into in its own separate podcast. You did mention something earlier that got me thinking about big companies potentially buying silver mines, like Tesla buying a silver mine or whatever, which is, I mean, we haven't seen it happen a lot. Car producers didn't go out there and buy iron ore miners. It doesn't really happen all that often where you have, the end user buying the mine. Why do you think it's going to happen this time?
Well, for example, Avino Mines has an offtake agreement with Samsung. So if you read their financials, you'll see that Samsung's really doesn't own the mine, but they own a lot of the silver from that mine. So maybe I misspoke a little bit, but I think I see more of that. But buying a silver mine is not out of the realm of possibility, obviously. And but it does send kind of the wrong message. I mean, if Tesla bought a silver mine, then it would spark a lot of interest in the silver and silver miners. But if they made an offtake agreement with, especially with a company like, let's see, BHP, a huge conglomerate that mines a lot of silver, but it's not their primary asset. This is what the streamers do. This is what the royalty companies do.
Hmm.
Streamers, especially, they actually take the metal itself. So I think that's more likely than buying a silver mine. But in essence, they don't really care if they own the company or not. They care if they get the silver or not. So that's a more subtle way to do it because you might have a headline: Tesla makes a deal with BHP for further needs for their technological evolution. I mean, that's a pretty benign, headline, but you read into it and you find, oh my goodness, look what they're doing. They're taking all the silver that's mined by BHP and using it for, Tesla Motors or SpaceX or whatever.
Yeah.
So that's probably more likely. But still, in essence, what are they doing? Well, they are kind of digging in the company, although they might not be owning a lot of its stock. They might have, again, an offtake agreement of some type.
Hmm. Good. Well, that would be a good time to. It would be a good time in the markets, I suppose, or I hope for myself. What am I forgetting to ask you though, David? I've kept you for longer than an hour now, more than you've promised me. So, what is something else that's on your mind about silver that you want to talk about that I'm not bringing up?
Well, I think the end of the book, the Silver Manifesto, which is kind of my Silver Bible. I felt obligated, or I don't know if obligated is the right word. I felt compelled to put out to the community. Someone will pick up the torch. I'm not necessarily the leader of the silver movement or anything like that. Some may see me that way. I really don't care. I've certainly devoted my life to sound money, a level playing field for all humanity worldwide. Uh, and in that chapter, I go beyond silver. That's a title. And I ask the question, we even need money. I actually look at silver and gold as a transitionary phase. And because of that, I've started a documentary. I'm not going to write another book. It's called The Silver Sunrise. It's at silversunrise.tv, and it looks at the greed, fear, and control of money and how to overcome it. So that's sort of my end game, you might say. We're done with almost all the filming. Looks like we're going to be able to get Robert Kiyosaki in the film. We're working on that right now. And then once we get all the filming done, we'll edit it, which will take several months. Hopefully it'll be out by Christmas. And it's going to be an education piece that'll hopefully be fun to watch. And my main purpose is not to convince you to buy silver or gold or even go on the sound money or honest money movement. It's to make you think. That's my main purpose in almost everything I do. Think for yourself, think outside the box, be true to yourself, and really control what you can. We can't control the political class. We can't control the greed. We can't control the injustice or the manipulation or the corruption, but we can control a lot in our own lives. And that's really something I would like to bring back to the common man and woman and let them roll around their heads for a while. and then take some action.
That's a good note to end the conversation on. Unfortunately, I have to let you go, David. I know you have an actual life to get to, so go ahead. It was a very nice talking to you as always. Hopefully, speak to you sooner than later. But I'll let you drop off now, as I will have to move to the CEO barbecue portion of today's Real Money Talks. Of course, though, not before I've done my favorite part of every episode, and that is, of course, the disclaimer. Right after which it will actually jump over to the CEO barbecue, of course. But then there's a warning on your screen right now that first of all, you're obligated to read it. It's rules. You have to pause the screen and read it. But you're better off doing so. This is not just some random disclaimer. It is also an actual warning that will potentially help you not lose money if you actually read it and understand it, which, by the way, that's the norm and should be the expectation in this sector. Losing money. That's what happens most of the time. And that's part of it too. By the way, money is part of it too. I am here to make money. I make money from the existence of this YouTube channel and specifically from companies paying for the production of their interviews. In this episode, both companies have paid for the production of their interviews. So you should just understand that, or you should look at this as marketing. And so start by understanding that most company communications online, albeit this interview or their presentation or the Twitter accounts or their news releases, whatever the company has produced, those are sales documents, and that's marketing. Those are marketing tools. I don't make buy or sell recommendations because, first of all, I still have no idea what I'm doing. And second of all, because there's a clear conflict of interest. But unfortunately, many out there will do. There's many people out there who they don't know what they're doing. They have no idea what they're doing. They take money from the companies and then they go ahead and tell you, oh, you should buy this. This is the best stock, right? So just anytime, that bias is not always going to be clearly disclosed, by the way, so with everyone out there. So it's safer for you anytime you're watching any type of company specific content, approach it with a dose of skepticism and treat it as marketing. Unfortunately, I don't think any of us are magicians. That kind of sucks to say, because I'd always hoped a little bit at least. But the guests here are not psychics, and some of the CEOs are even normal people. So we don't possess any superior knowledge about what will go up, what will go down, or what's going to go in circles. Nobody knows that. So unfortunately, try as I may, this show is called the CEO Barbecue. It is meant to grill the CEO. I'm trying to ask fair and tough questions, but I won't always catch all red flags or all challenges with the company or all shenanigans, whatever it may be. And although you shouldn't tell my wife this, I'm not flawless. Matter of fact, again, I still have a whole lot to learn. I have experience to build up. So this is all to say that you shouldn't blindly trust me or anybody on the internet. You should not rely on anything that is intended as marketing. So you should do your own research. And just as Charlie Munger used to say, if you don't understand it, don't do it. In addition, no guarantees are going to be made here besides one, and that is that there will be forward-looking statements in these conversations. Those are conversations that are general and impersonal in nature, containing hopes for future events that may or may not take place, depending on many different factors, both within and outside of the company's control. Be aware of that. Be aware of the inherent risk to investing. Be aware of, most of the times, pretty much all the times, the inherent bias to company communication material. And please talk to someone who's proven to know what they're doing and talking about, like a professional investment advisor, as well as please do more research before taking your own decisions. And you do that by visiting setterplus.ca. That is a government official website where you're going to find the company's official filings. So you want to read their financial statements, their MD&A, that's the management discussion and analysis, the management information circular. And if you have the nerves for it, go through the technical reports. Even if you don't understand every word, you can at least read it. I promise you, by the end of reading at least one, you're going to know more about rocks than you ever thought you're gonna. So do all of these things. If you don't enjoy losing money, and there are disclaimers on your screen right now. Again, if you don't enjoy losing money, read them and be careful out there. With all that said, though, I will finally kick off the CEO barbecue portion of this Real Money Talks episode. And I'm going to have to go to Nevada, again, somewhere between Reno and Las Vegas. So southwestern Nevada, that is. But I'm not playing any games and not even gambling. Well, at least not exactly gambling, because I'll be looking at a currently operational high-grade gold mine. Luckily, I'm not going there alone, as I'll be joined by Kelly Malcolm, the CEO of Borealis Mining. Company's listed as BOGO, so that's BO on the TSXV in Canada, where an average of about 100,000 shares trade each day. And I see a 52-week high of 91 cents and a 52-week low of 51 cents. But it is worth noting that there's actually no 52 weeks to speak of, as this is a brand newly listed company, but that will make more sense in a second here. With a market cap of about $75 million and roughly 83 million shares outstanding, today this is a 90 cents stock. In addition, there are 17 million warrants and close to 5 million options outstanding, leaving us with a little over 100 million fully diluted shares. The most famous name on this share registry is Rob McEwen, although there are a few who currently, Rob McEwen himself owns about 16% of the company, whereas insiders own about 14% and institutions own close to a third of the company, so 31% to be specific, leaving about 39% in the hands of retail investors. This is where I typically walk you through the company's balance sheet as well as the income statement, tell you what their G&A is, tell you what the G&A to exploration ratio is. But again, this is a brand new company that's been public since only this summer, so those numbers are not yet really representative of the company's business. I do hope to be asking about them later on in the conversation, though. And as always, just don't rely on me or anything said herein. Finances are a fluid thing, so by the time you're watching this, you should visit the company's website as well as setterplus.ca and look at the most up-to-date numbers yourself. Make sure you're getting the full picture. For Borealis, that full picture is 100% focused on the 100% owned Borealis gold project. Again, it's located in southwestern Nevada, specifically on the Walker Lane trend. And so that is a short drive away from Reno. They got this asset by paying $100,000 in cash, as well as issuing 19.9% of its shares on the RTO date to the vendor of the property, who then ended up block selling those shares to Rob McEwen. That's where his involvement into the story comes from. So he actually bought those shares himself. This is a currently in a historically producing gold asset where historically it produced over 600,000 ounces of gold in an open pit heap leach setting. Production has historically been on and off, though, even as recent as 2022, and why that stopped is something I hope Kelly will touch upon in the conversation. But it is a fully permitted heap leach gold mine right now as we speak. That produced at over 2 grams average grades from 8 near-surface oxide deposits historically. So that's part of the thesis here going forward as well. The mine also produced some gold this year, though. So first gold pour was announced at the end of August this year, and then second gold pour from the carbon columns was announced just last week. Production here is, again, a simple heap leach operation. So basically mine it, crush it, grind it, stack it, leach it, and then recover it using ADR, and then process it into doré gold bars. That happens, by the way, in Salt Lake City, so not at site, and then sell the doré gold bars, I hope. The historical resource on the project shows close to 2 million ounces of gold with an average 1.3 grams per ton grade in the M&I category, as well as a small inferred resource of close to 200,000 ounces of 0.3 grams per ton gold. So quite the difference there is something we're going to talk about as well. Again, this is and should be considered historic, though, because it dates back to 2011, although it does come from an economic study with a rather high degree of certainty, that being the PFS. But a bit of production and 2 million ounces in the ground is not why Borealis got this asset. They got it because there has been no regional exploration on the project since 2008, and there are multiple high-priority geophysical targets from historical IP, MAG, and EM surveys that they want to get to, after also flying their own magnetic surveys on the property, and that is, of course, going to be a big part of the conversation. There is currently that exploration program going on right now as we speak. It's a planned 3,500-meter drill program going on. So we're going to talk about exactly what they're drilling, when we're going to see results, and all these good stuff. There are 2 known zones or 2 known styles, better set of mineralization here. That's the oxide mineralization, which is of course close to surface and supposedly extends beyond 1,000 feet or about 300 meters. And then there's high sulfidation epithermal sulfides, which are of course deeper, but some very high grades have come back from historic drilling on those, including 67 meters of over 16 grams per ton gold. Although again, that potential remains largely underexplored. And this is starting off as a simple, cash flowing story that the company plans to get to cash flows and then plans to grow it partly by using those cash flows from the mine production to expand the resource and potentially make new discoveries. So I hope you have plenty of time to talk today, Kelly, because I got a lot of questions about the what, the how, the why, the where, the who, the when, how much, and even if a few ifs and buts. But this is your first time as a CEO, as far as I understand it, and it's definitely your first time on the CEO barbecue. So, obligatory first question here: who are you, and why should I trust you with my money?
Great question. I'm Kelly Malcolm. I'm a geologist by profession, also with a degree in economics. Antonio, I've worked in the industry for 10 to 15 years now. Um, Previously, my role with a larger company was at Detour Gold, which was eventually sold to Kirkland Lake Gold, which went to Agnico Eagle. I wasn't on the mining side of things. I was on the exploration side of Detour. I also worked at St. Andrew Goldfields, which again was acquired by Kirkland Lake Gold, which seems to be a common theme in the Abitibi. And so your first question is incorrect. I did go off, and I started as a CEO of a little junior in the Yukon, out of Detour Gold. I took a risk. It was a very small market cap company. We raised about $3 million in a 2 year tenure, and we explored. Unfortunately, didn't have much luck with the drill bit, and this was in the cannabis the cannabis time. So we considered pivoting that company, Generic Gold Corp, it was called, into a cannabis company, which would have done very well for shareholders, but unfortunately that deal didn't go through. So I stepped down from that role and then joined a company called Amex Exploration, which has also been on your show. Um, I was VP Exploration there since the beginning of 2019, where my role entailed obviously identifying drill targets. We found from basically 0 ounces through to a recently announced resource of 1.6 million ounces of gold. But I also did a lot of marketing, a lot of investor relations type work, corporate development type work, which led me to want to start my own thing, which is sort of the basis of how Borealis came to be.
Hmm. So, I've worked with Victor Cantore and as well as Gérald Paneton, who's also a friend of the channel. So that seems like an interesting career there.
Mhm.
What happened? I mean, last time when you were CEO, what are the lessons, I suppose, that you learned from that? I mean, no one's out there without failures. But what did you learn from that? Is there something that you took away and you can now apply to Borealis?
Yeah, 100%. So one of the things that was positive is people knew that I was busting my hump on that asset. I was the cook, I was the cleaner, I was the geologist, I was the core cutter. I was doing a lot of that effort to try to make that company succeed. And the investors that played in that deal knew that and actually have supported me in my later career. So one of the things is treat investors' money like it's your own. And yes, we're playing in a risky game. If you do your best, the geology is the only thing that's against you. Um, People have a higher level of forgiveness than they would if you were to squander that capital, take it all in salary, take it all in bonuses, and not put it in the ground. But in this case, we raised three. We spent 2.4 or so directly in drilling, and it just got very challenging. The Yukon is a tough place to explore. So we decided to pivot to fix or to give shareholders a chance at regaining their capital. So I learned a lot on that one. And then since then, we've had great successes with MX. Although the stock's dropped a little bit lately, I think that will be a mine in the future. Um, so I think that'll be a win in the end for shareholders there as well.
Hmm. I do want to talk about a couple of things that you're mentioning there. And when I ask why should I trust you with my money, what makes it easier for me to trust people with my money is when they trust themselves with their own money. Of course, for you, insiders are listed as owning 14% of the company. How much of that is you, and what's your average cost of capital?
So I'm 4.3 million shares, 150,000 warrants, and I my average cost is probably about 10 to 15 cents. So we did put this together. Originally, this company was we were actually looking at lithium assets. This original company name was called Consolidated Lithium. We were looking for something in Argentina, Peru, when the lithium market was hot. So we basically passed the hat around with some close friends who are now big investors and have put lots of money into the company. So we did a raise at 2 cents, another one at 5 cents once we pivoted to gold. And then our next capital raise was 30 cents. And then we did a financing at 50 cents where I put in, I believe it was $300,000 at that 50-cent level.
You guys put this project together before the company was public and did a lot of work prior to it as well. Has that resulted in anyone within management owning a royalty on the project personally?
No.
Okay. Is there a royalty on the project?
Yes.
Okay.
The royalty ranges from 2 to 5%. So this was, well, we can go through the history of the project in a minute, but this was originally staked in 1976. Discovery was made in 78. Mining started in 81. The original royalty holders from 1976 still hold that royalty.
Nice.
So it's the same group. They're good people. Obviously, if they first picked this up in 76, they've had it for quite some time. So perhaps there's something to do in terms of lowering that royalty, but we'll see once we get to that road and how we can cross it.
Good for them, I suppose. Hopefully you can cross it though and figure it out. I do want to talk about the history of the asset here because it is an interesting one. And we're going to get to it a bit later on. But I also see that there are about 30 million shares in escrow now. That's about 40% of your shares outstanding today. And they'll be coming free trading over the next 36 months, I believe. How are you going to deal with that free trading date? I mean, do you have a plan to mop up that potential additional liquidity, or is it maybe in strong enough hands that you don't expect it really creating too much selling pressure?
So really, like, I think your job as CEO is not to fight selling; it's to find buyers. That's really what you're meant to do. Obviously, we'd like to retain shareholders as much as possible. Most of that stock is in very good hands. I'm 4 million of the 28 that are part of the 36-month escrow. There's another 13.4 million shares that are on an 18-month escrow period. That's all Rob McEwen. I'm not very concerned, to be honest with you, about those different tranches. Look, our first tranche of that came out on our first day of trading, so that was about 3.5 million shares. We've traded about 6 million shares since launching the company. So all those people that could have and would have been selling have been good shareholders to date, and I'm hoping that continues going forward.
Yeah, that's a good point and a fair note that as a CEO, your job is to find buyers and not to stop sellers. Although hopefully you do both, and you do that with the drill bit and with the production. As I mentioned at the beginning, though, I typically do a financial overview of the companies, but given that you're a newly listed company and newly RTO'd company, that wasn't possible. So maybe you can walk me through some of your expectations for spending money this year and into next year. How much do you think your monthly G&A is going to be? How much is going to go into the ground? And how much is going to be covered by production?
For sure. So in terms of where we are with capital, so we raised about $16 million at the 50-cent level. That was our pre-public raise level. That's where we brought in Eric Sprott, a number of different institutions. I played there along with a number of insiders. Some of that money went into our bond. So we've got about $4 million Canadian in restricted cash, which basically is inaccessible to us until the insurers of our bond release it. We also had to put money up for the bond. We've spent money on plant upgrades. We've spent money on our pumps on site. We've been doing some exploration work, and of course, just general G&A. In terms of where money's going to go going forward and how much that will cost, for us to put this mine back in production, and again, keep in mind that this is very forward-looking. There, as you mentioned in your earlier statement, the resource base is not current, so I can't give forecasts, but I can give general financial guidance as to what it would cost to get up and running. You're looking in the range of $3 to $5 million US. What we have in front of us, though, and we'll just talk about production, we'll talk about exploration and other things in a second, if that works for you, Antonio.
Sure.
So we've announced twice that we've poured gold this year. That's brought in about, or in terms of overall revenue, let's call it better than $800,000 US. We've got a big chunk of our leach pad, and I recommend to listeners that you take a peek at our Verify site tour, because you can see on that leach pad the corner of it that doesn't have any of these wet spots on it, which are the sprinklers and the leach lines. So there's a chunk of that pad that's never been treated with cyanide before. Now we've also got a stockpile of 350,000 tons of ore that was mined out from a very nearby pit, which of course is within our mine permit. That's not been crushed nor stacked on the leach pad. So, and again, this is very forward looking, but if you look at the average grade of what was mined out in the past, that should yield several thousand ounces. Not a huge number, but that should be sufficient money to eventually turn the taps back on and get back into production on an albeit small scale basis. And that'll be blasting rock, mucking it out of the mine, crushing, stacking, and repeating the process. So I think, honestly, we're probably self-sustaining at this point in terms of getting the mine actually up and running, because there's been so much capital spent on infrastructure, on the plant, on the substation, to get to where we are, that I don't think we'll need real capital to get that going. On the exploration front, I'm an explorationist. With MX, we drilled 500,000 meters. I like to drill holes. I like to test targets. What we're doing right now is not the big discovery drilling. We're doing some confirmatory work. We're doing some expansion work, and we're doing some production focused work. So that's not going to yield the big discoveries. That will happen in 2025. So for now, we're fine in terms of cash. We've probably got $2.5 to $3 million in unrestricted cash at the moment, plus and I'm speaking Canadian, by the way, plus the revenues coming in from the gold. So we're certainly not in a cash strapped position right now. But obviously, before we go into production, just to be on the safe side, which is we'll talk about the project history in a bit, I'd prefer to have a cushion rather than be tight on capital. So at some point before we go into production, yes, we will of course do a financing. We'll talk about the shareholder registry in a bit, I'm sure. There's some really great and supportive shareholders who wouldn't mind having a bigger position here.
That's an interesting point. I do want to talk about raising capital in them and a bunch of the other stuff that you mentioned, specifically the drilling and stuff like that. The $3 to $5 million that you mentioned there, what does that cover? That includes just everything in terms of operating. That's not only G&A, I assume.
No, so that's just operational, basically AISC. The real G&A for this company, because it's not solely production focused, will be more than the all-in sustaining cost, because we're going to be doing some exploration work. We're also looking at other assets in and around Nevada, so capital may go into those as well if we're successful in our endeavors there. So it's basically that would cover the costs of bringing contractors to site, so mobilizing them in, basically paying the bills from when they start through to when revenue starts being generated and we start getting money back from refiners, because there's about a 2-month window or so between crushing, stacking, and actually extracting all your gold. Once you do that, you then have to strip your gold from your carbon, put it into doré bars, and then even from that point, you're still looking at about a month-long process from doré bar to cash in hand.
Yeah. So, but to go back to that, what I'm asking about G&A, I'm thinking about just the administrative expense. So management, marketing, travel, and everything. What do you think that's going to sit at on a monthly basis?
Sure. So the top 4 execs, so that's me, COO, VPX, and CFO. That's 65 grand a month. I like marketing. I think I find it funny when companies are embarrassed to say that they're marketing and spending time and dollars advertising their product, which is their shares. So we announced in the most recent press release we spent about $150,000 on 3 campaigns. that'll take us over the next 6 months to a year. But also we're active at conferences. We saw each other at Beaver Creek a number of times. Unfortunately, didn't get a chance to sit down, but that's really my bread and butter is the one-to-ones, meeting investors. I love doing these webinars too, so hopefully we can do it again soon. But I think that you need to spend that money, and I'm over the next 12 months we'll at least spend $1 million on marketing for the company. I would be surprised if it wasn't more than that. And I think if you want to build something substantial and have your name and have liquidity out there, you have to be spending that capital and spending it effectively and wisely, and making sure you have a strong ROI on those dollars spent. And it's a funny thing to measure, because it's not necessarily an immediate ROI. I think actually I saw you did a post about this recently, about determining the value of what you get from these different conferences.
That's exactly where I wanted to go with this, because we did see each other in Beaver Creek, and I wanted to ask that. You were running around, didn't have the time for it, so I thought I'm going to ask him this when we sit down. But why were you there in the first place, and why are you going to these other conferences? What again? What do you think is the ROI? What kind of message do you want to relay, and what do you hope to get in return for that $1 million+ bucks that you want to spend on marketing?
Sure. So we'll talk about Beaver Creek in particular, just because it's such in my opinion, it's the best place to go. Not really even to broadcast your story, but to I guess broadcast. But it's not like you're reaching a wide audience, but you're hunting with a rifle. You're targeting a specific set of different people. So that conference, it's number one, all the companies are vetted, so you can't just go. There's a lot of people hanging in the Hyatt lobby, but they're not actually invited to the conference. You've got to have a certain market cap, a certain amount of I don't know, respect in the market, I suppose, is what it is. All the actual individual investors are vetted. They have to show their portfolio. They have to be a known investor in the market. All the institutions that play in the game are there, and all the mining companies are there with their corp dev team. So for us, that conference was amazing. So we got to meet existing shareholders, a number of prospective investors. We met with a number of different producers. So the ROI on that one, I can tell you, is quantifiable. I was offered money. I saw a number of different assets. So we can touch on this in a bit if you want to talk about the business plan. But we are looking to grow quite substantially through acquisition as well, on top of Borealis. So we saw some beautiful projects that really no one's looking at, in particular from some producers that kind of have these things. They kind of open up their trench coat and said, look, we've got this, we've got this, we've got a number of different properties that no one's really thinking of because they haven't been in the public eye for so long. And got to update shareholders that have invested for over a year and haven't even seen the company public for a few weeks at that point. So we had just gone live about 3.5 weeks before that conference started. So it was a really good place to update people, but also meet new investors. And for me, one of the most interesting things was pitching the story and engaging the reaction to different facets of the business plan, and seeing where investor interest lies, and what people are keen on, where they think the value is, and again, we can touch on that in a bit.
Yeah.
So that's Beaver Creek. And then in terms of marketing, you need liquidity, you need volume. You can't get big institutions in unless you're trading. You need retail interest. Number one, because that's who moves price upwards and downwards, and retail sentiment is so important, and you need eyeballs on your stock to get that retail interest in your name, right? So I think you have to spend some money to get all those things coming together in one spot.
Yes, and when I ask about marketing, I think when a lot of people ask about marketing, they're kind of asking about it from a skeptical perspective of saying like, hey, you're not going to do too much marketing, right? I want to know that you're doing the right marketing. There's no way around it. You have to do it. You have to get your name out there. I just want to know that you're doing it sensibly and you're thinking about ROI to begin with. I do want to talk about the acid here, though,
I
Kelly.
will jump in one quick
Sure.
second on that one. So
Please do.
and then I'll give him a plug too. So the gentleman that put us together is Bill McLean. He runs a company called Triple Bull Consulting. Literally, what he does for a living is looks at metrics on dollars spent versus ROI, and really the only metrics you can utilize is volume, and ideally price movement. But we have a consultant who does exactly that, and he looks at, you should be using this guy instead of this group, or this group instead of that group, because these are the people that are moving markets and putting the right eyeballs into a name. So we are actively working on maximizing the ROI per dollar spent.
Yeah, exactly. Bill's great, and so when him and I spoke, we've had multiple conversations about these things, and so he gets it. There's not many companies out there who get it, so that's a good point.
Yeah.
I do want to go into talking about the acid here, though, Kelly, because what is you mentioned the ASIC there, so your all-in sustaining cost. What is your all-in sustaining cost per ounce? Is that something you're announcing yet, or are we going to have to wait?
It's unfortunately something that I cannot legally announce at the moment because we don't have a resource base. We don't therefore have a reserve base. We have our internal stuff that we're working on. Until we publish a resource statement, all we'll be able to announce is our quarterly updates or production updates. We won't be able to give any guidance. So you won't unfortunately be able to see that unless we do a resource update ahead of resumption of mining. That's unfortunately something that won't be shown. If you do look on CDAR, though, from Griffin Gold, you can see what their forecasts were for all-in sustaining costs, and it's quite a sensitive to the gold. The project is quite sensitive to gold price, so numbers are looking quite attractive internally at this point.
When do you think you're going to be able to come out with that specific number, though?
In terms of forecast, I don't like. So the question is, and again, ROI. So for me to update a report, do a full resource reserve statement, and get everything current, you're looking at $300,000 to $400,000. I don't know that that's the best use of capital at the moment. I would rather make a discovery with the drill bit and do a global resource after that discovery has been identified, I think. But again, we'll see what the overall sentiment of our investor base is, and if there's a real necessity to get that out soon, we can spend that money. But I don't see how we generate the value from that, to be honest with you, at this point.
So you don't necessarily have an end date in mind that you can give me?
No.
I
don't want to give you a timeline because I don't want to miss it.
Sure.
Yeah. So I don't have one at the moment. We are doing the work so that we would be able to, I would say in the next few months, we could be in a position to update that statement. I don't know that we will in the interim, and we may wait until next year once we start doing some exploration work and looking for the next oxide deposit.
Let's talk about that and take it all the way back to historic times, because this, again, a historically operating mine that multiple groups try to bring into production since, as you mentioned, the late 70s, and they did multiple times, but all of them eventually gave up after a while. How come? What's the catch? What's happening?
So through the 80s, as I mentioned, this was found in 78, started mining in 81, which is amazing when you think about how quick that was to turn around into production.
Yep.
It was a profitable mine. I'll send you the paper. There's an internal paper from, I think it was Echo Bay Mines at the time, that states that at certain periods through Borealis's life, it was one of the lowest cost producers in the USA. The reason for that is the nature of high sulfidation epithermal deposits. So oftentimes what happens in a high sulfidation deposit is you have a super acidic, very rich fluid that goes up through a feeder system or a chimney, and then usually will hit some favorable strata or layers of rocks, and then kind of blow out within that that favorable horizon. So you get this big lateral halo of 0.5 gram to 1 gram per ton gold. But in the guts of that system, you get your 10, 20, 30 gram per ton material. So once each of these smaller pits was discovered, when they actually mined out the eyes of them, they were producing for exceptionally low cash costs. So that's what I'm excited about, looking for additional deposits. Right now, for the most part, we've got the fringes, so the lower grade stuff that's remaining, and that's what the mine plan was built on in 2011. In terms of why I think that it will work for us when the previous company called Griffin Gold was unsuccessful. Number one, I don't think they were unsuccessful necessarily because of geology. They ran into some capital constraints, which is one of the reasons that they failed and the mine went bankrupt in 2012, 2013. So Griffin Gold, they as I understand what happened, they were completely owner operated. So all the risk is on you, and if something happens, you have your own staff there, you have your own benefits to pay. And what I believe happened, and again, it's kind of hazy, was a boiler broke, and in order to strip carbon, so just for listeners, knowledge base. So when you're in a heap leaching environment, basically you open pit mine, you put it on a crusher, put it through a crusher, it goes onto your leach pad. The leach pad you apply cyanide to, it goes into a tube, and then basically runs through a Brita filter, a set of carbon columns. Once your carbon columns are saturated with gold, you take it into your plant and you run it through a stripping circuit. So basically you superheat a solution, and it strips all the gold out of carbon. To do that, you need what's called a boiler. And as I understand, their boiler broke, and again, this is not 100% factual, but this is just what I've heard. Boiler broke, and they were unable to generate revenue, unable to pay the bills, had to take on some debt. They took on the debt with Waterton, and then within several months, Waterton had sort of worked their way into the ownership structure, and several months later they were bankrupt, and that was basically the demise of Griffin. So I don't necessarily think it was geologically related. We've shown, based on our ability to raise capital in what was an ugly gold market, that we don't have a constraint on our ability to raise capital. I think that we've got great access to capital. And it's a matter of getting the geology right, the mining right, the engineering right, and we're quite confident that this is a good project with lots of great upside.
I also want to talk about that upside. So plenty of things to talk about furthermore, but is there something you've learned from the historic production that, again, you can apply for this time around, or is it, I mean, is there merit to what happened again back in a day? You're now studying it. You can apply it for the future and make it better.
Yeah, we've got a really, really strong technical team. Our VP exploration is a resource geologist. His previous role was a senior resource geologist at Agnico Eagle. So he's got a really, really strong understanding of block models, of mine models, of how reality, like, because you go from a block model into reality. Oftentimes when you actually go into the pit, it doesn't really mirror what your block model says. So he's got a really good understanding of applying geostats in a way that they can mirror reality quite well. So he's looked at the older models, identified some flaws in them, and has revamped things. So we plan on doing some production drilling to validate that newer model and get closer to reality when we prepare to eventually mine. One of the other things that was done poorly in the past, and it's not really anyone's fault, it's kind of a cryptic thing when you're looking at it, is understanding the difference between oxide ore and transition material. And the reason that's very important is your pure oxide, you'll get 75 to 80% recoveries through the heap leaching process. Pure sulfide ore is very much not really heap leachable. You're down to like 25 to 30% recoveries. And transition material is essentially a mix between those two. So obviously, you're okay if you're on the upper end of that transition scale towards oxide, but if you're dominantly sulfide material, your expected recoveries will be quite poor. So we're going to do quite a lot of work around that ahead of eventual future mining to really understand those contours. And basically, you're just mapping out where paleo waters were flowing, because that's really what's driving oxidation. So absolutely, we've learned a lot, and we've had the asset for now a year and a half, so we've had lots of time to dig in, do our homework, dig through all the old reports, all the old maps, and really get our heads wrapped around the asset.
That is also important in the concept of ROI too, because there's money spent on that asset, right? Even though you didn't spend it, there's money that went into the ground that you can now take some conclusions on. So I like that answer. But there's no legacy issues with the courts or the community or environmentally, BLM or otherwise. So nothing.
No. We're one of there aren't very many permitted mine sites in Nevada. We are one of, I would say, 30 or 40, and we're funny enough in the USFS. So the Forestry Service, our actual permit is within USFS, which usually people are like, oh gosh, I can't work there. We literally have a permitted mine within a portion of the forest. Nevada is such a wonderful place to work, provided that you're able to effectively communicate and provide sensitive plans and present your case and show that you're willing to work to minimize impact to the environment and to communities. I think you can work anywhere in that state. And then our other half of the properties in the BLM, and no issues on either fronts, Antonio.
I want to work toward talking about that permitting, about you being fully permitted, but I'm gonna take the long route there. If the grades, as you hope, do increase with depth, do you foresee needing a mill, or is everything going to be heap leached from here on out? And I promise these questions are going to make sense in a second once we get to permitting.
Sure. So, number one, I don't necessarily believe that the grades do increase at depth. It becomes a different type of system. So we have a body at depth called the Graben sulfide deposit. That is beautifully high grade mineralization, but it's not necessarily the same system as the other pits. It may be a different ore body altogether. Within the feeder zones of each of the pits, yes, I expect that you will have higher grades, but you would have had, as I mentioned before, you would have had those pipes at the tops of the pits when they first started mining. So I think you're just going to continue being able to mine that high grade going down. And absolutely, as I mentioned before, when you look at the oxide to sulfide body, there is a huge drop in heap leachability. So you will absolutely need a mill in order to process that sulfide mineralization. And the conventional method would be to mill it, float it. So you run it through a flotation circuit. And we know that this ore is floatable. That work has been done in the past. And then you take that floated concentrate and you ship it off to one of the roasters in Nevada. So Jarrett Canyon, Lone Tree, Nevada Gold Mines. There's a number of different options. And that's one of the nice things about Nevada, is that those roasters are permitted.
And none of that is going to be refractory gold like those roasters. Everybody's going to be happy to take it. You don't have to do anything special.
It absolutely is refractory gold, and that's why there are roasters in Nevada. So there's two different styles of refractory gold: single and double refractory. So single refractory is what we have. It's when your gold is trapped up in a crystal, almost always within a sulfide crystal. Oftentimes that can be in arsenopyrite. In our case, it's in pyrite, which is the better of the two, in that there's obviously less arsenic in the system. Double refractory ore is when your ore contains a lot of carbonate, and that will actually steal the cyanide. So not only is your ore tougher to treat, but it's also stealing cyanide from your from your milling process. So yeah, in the refractory, in the roaster type environment, what you do is you basically burn your ore, and what you're doing is you're burning the sulfide to release sulfuric gas and iron and gold. So it's a very, very common practice in Nevada.
Okay. We should do, as you said, I hope we're going to be talking again soon, and we should do kind of a geo deep dive, and we talk about all these things in that episode. You've set a goal, though, as far as I understand it, of 100,000 ounces of gold per year in production. That's where you want to go. When do you think realistically you can reach that goal?
It's lofty based on where we are right now. So that's kind of where the business plan comes in. So we've got some serious company builders. We got mine builders on our team, but real company builders on our board. Like Bob Buchan built Kinross Gold from a single asset or two assets, basically, into one of the largest gold producers in the world. So to build a mid-tier mining company, you do it either through the drill bit or through acquisitions or the boardroom, basically. We intend to do both. So we're looking at a number of different projects, and we hope to act on some of these things pretty quickly. While the market is still a bit soft in terms of equities, I think there's a big disparity between the value of what's in the ground and the value that's being attributed to some of these companies by the market. So I think that within the next 12 to 18 months, there are plenty of opportunities out there that could help contribute to this 100,000+ ounce per annum producer. So yeah, on top of the acquisition potential, drilling is obviously the easiest way and probably the cheapest way to grow ounces. So we've got a number of different targets. As I mentioned earlier in the call, we've not done the big push for the new discoveries yet. The rationale there was that there was so much data when we acquired this project that we wanted to spend the time and money to really compile, digitize, modernize all that geophysical, geochemical data, drilling data from the 80s, 90s, and 2000s that wasn't necessarily in a modern working condition. So that's largely done. We should have the balance of all that work done by November or December, and that will dictate where we go and how we identify targets in 2025.
Right, and that we're going to get to identifying targets as well. But the leach pad that you currently have has a 4.2 million tons capacity, as far as I understand it. You say that's permitted for expansion, so I told you it's going to make sense. But when do you need to go for that expansion, and how much is that going to cost you?
So if we were to process kind of what's in the 2011 reserve base, we would pretty well be okay with what we have right now. In basically what was in the mine plan in that 2011 pre-feas, there's about 4.3 million tons of capacity remaining. Within the next, let's say once we start in production, we would immediately look to identify or permit a new leach pad just to be safe as we look to advance and identify new deposits. So we'd look to start the engineering pretty quickly, but we're good. We've got quite a bit of runway with what we have already. And one of the main reasons that these leach pads are often limited in terms of capacity is to minimize topographic changes. So when you look at a mine site, particularly, let's look at the Abitibi Detour Lake, and you go there in Google Earth, all of a sudden there's mountains being built and huge lakes being formed, and you're dramatically changing the natural topography of the environment. In our case, what we have is we've got this valley and then a mountain range running up alongside of it. So you could, I don't see why we would get pushed back upon if we wanted to increase the height of our heap leach pad beyond what it's currently permitted to, because it wouldn't change a thing in terms of the natural environment.
Well, you did mention that you have all the permits. Does that include water? I know that can be a challenge in Nevada. How are you managing that?
So we've got 2 water wells that we're permitted to access. expires another 15 or 20 years. Like we're the nice thing is we're on an aquifer that's not really being tapped by anyone else. So we don't have any communities around. So I'll take a step back. So we have the town of Hawthorne, then we climb up over a mountain range called the Lucky Boy Pass to take us down to where we are. And then behind us, we're kind of in a bowl of mountains. It's an isolated basin. There's some ranching, but aside from that, there's virtually nothing in and around behind us. And that's the aquifer that we're drawing from. There's very little industrial use being drawn from it. So we've got a great water permit there. We've got a crushing permit. We've got obviously cyanide permits and all that fun stuff. So we're fully permitted to mine within the existing permitted footprint. So when we find new deposits, they will have to be permitted as basically quarries. And then you would truck the ore to the existing permitted footprint and minimize your timeline to permit, and also timeline to production should be decreased in that regard.
One asset companies have recently come under a bit of a pressure after what happened to Victoria Gold. Are you thinking of diversifying away from Nevada on a long enough time frame, and when do you see it happening? When in that process that we're talking about here do you think you move away from being a one asset company?
Beautiful question. So quickly, so there's a few things. Number one, single assets. You have just risk that your asset could fail, and your company's done. Like Victoria Gold, for example. There's a number of other examples that have happened. Pure Gold Mining, same thing. What we're looking to do is stay around Nevada. We think that's the place to be. It's a wonderful place to work. But one of the neat, and we'll go back to Beaver Creek. One of the neat things, and one of the good comments that I heard from a really big prospective investor was that small mines would be great if not for G&A. And one of the ways to mitigate that and minimize the impacts of that against your free cash flow is to have an umbrella, a G&A umbrella, with a number of assets under that umbrella. So what we're looking for in terms of our potential M&A strategy is smaller projects. So it's kind of sub 1 million ounces that can do 30, 40, 50,000 ounces per annum at low cash costs, heap leach, and utilize our existing ADR infrastructure to minimize costs of CapEx and OpEx on these different assets, and use our existing management team that's all Nevada based to kind of oversee all these different projects. And that way, that's one of my fun pitches that I didn't bring up. But you minimize your single asset risk that is a real thing. And just like you said, Victoria Gold went from what would have been $1 billion plus company right now in this gold market to zero.
Pretty much. Yeah. So when do you go diversifying away from that? What stage of the company do you have to be in?
This stage we're looking pretty actively at different projects, and that was another. Again, we'll go back to Beaver Creek. What was fun about Beaver Creek, in contrast with like I was working with MX, where they're looking to build Perron, but there's a number of different producers looking for accretive ounces. So that's likely their business plan is to sell that at some point in the future. We're looking for the opposite. So we're looking to build a business. We're looking to build a mid-tier mining company. So going to meet these different producers, they expected that was our pitch, was here's our story, take a look, give us some money. We don't want that. We don't need that. It was really fun because I got to tell them our M&A plans, M&A strategies. This is what we're looking for. What do you have? And they would present us with ideas and opportunities rather than the other way around. So we're active on that front as we speak. We're looking at a number of different projects.
So realistically, what are we talking about? Another deal before the end of this year? Or is that something for next year? How do you see it?
I don't like to predict timelines, but yeah, I soon in the next 6-8 months we hope to see our first thing active and closed. And there, like I said, there's some really, really, really great projects out there that are just owing to either size or just investor fatigue, which is a real thing, as you know, in some really great projects. They just every time there's a bid coming in, you have a really tired investor that just hits it right. That's a real thing in the market, unfortunately. So there's great projects out there that just are not trading where they should be. So that we're hoping to look at some of those in the near term.
Is that Nevada specific, or are you jurisdiction agnostic?
For the moment, Nevada specific, and it's for that umbrella type focus. I think once you build yourself up to that 100,000+ number, then you can start looking further afield. If you look at 100,000 ounce per annum producers on a comp basis, you're looking at a, and again, this is super forward looking and dreamful thinking, but you're looking at a $7+ hundred million company. So you can look at much larger projects, and you can afford to have another management team in, I don't know, Finland or Australia or Canada or wherever else one would look for good jurisdictions in gold. But for the foreseeable future, it's Nevada focused, maybe Idaho, maybe Arizona, but in and around that neck of the woods.
What about after that, Kelly? What's the long-term goal here? Build a mid-tier gold producer and keep growing it that way, or do you think there's the potential for you being the subject of M&A down the road?
Oh, there's a really, really neat case study that I'm again dreaming and hoping for in the future, of a company called Glamis Gold, Glamis Gold, that was acquired by Gold Corp for 8 point something billion. They did the strategy that I'm trying to employ, which is grow your assets, produce from your assets, generate free cash flow. But they did it looking at smaller projects. They weren't looking at the big 500,000 ounce per annum producers. They were looking at 50, 60, 70,000 ounce per annum producers that generated big margins. Kind of like Constellation Software, if you know that story, where they're just looking for free cash flow. And they did that 5 or 6 times, and then bought a big asset in Chile, I believe, and that's what led Goldcorp to take them out in the end. But they built a spectacular business by utilizing conventional business metrics, which is buy companies that will generate free cash flow at good margins. And weirdly, we don't, in our industry, we somehow don't look at that as like, it's a weird business in that the business model is to build something that gets sold before you actually generate money.
Yeah.
I think the big money is made when you can show, look, this thing is a cash cow, and that's my opinion, anyways. Is to get it there. I think you get a better ROI in the end.
If you can get there sensibly from a dilution perspective.
Exactly, yes. So that's the big driver, is you maintain a strong share price, maintain a really good capital discipline. But if you're able to do that, and our board has done this before, so this is not just my naive dreams. We've got a team that can do exactly that. But you're 100% right. If you can do it while minimizing dilution, and not just printing shares every time you turn around, then that is the biggest bang for your buck if you can get it done that way.
Well, talk to me more specifically about that, or maybe make like a checklist or something along those lines, because essentially what you're saying here is that you make the most money for your shareholders when you sell an actually operating company that's actually cash flowing from the production of, in your case, gold. How do you support that statement, first of all, and how do you get there from that dilution perspective? Is it a combination of marketing? Do you chase the right investors? I mean, I have no idea where even to start. So how are you going to do it?
Great series of questions. This is the CEO barbecue. I love it. So the obviously everyone wants to be a great bear. That's the archetypal example of how to run and effectively sell an exploration company with a huge premium and everyone that ever put money in there did very, very well. Actually, Christina McCarthy on our board did the same thing recently with Paycore Minerals. The other end of the coin is Kirkland Lake Gold. So Tony McCooch got in there when they just had the Macassa asset. They had some smaller projects in and around Timmins. They bought the Crocodile Gold or the Fosterville asset. That was spectacular, built up a serious currency with that asset. And then they bought Detour Gold. And that really, if you look at Agnico's growth profile, was the reason that they actually bought Kirkland Lake in the end, was for that huge free cash flowing asset. But it was built through these different projects that got them to be able to buy that one big thing. And then they sold it for $14 billion. On the chart, that's a big win for pretty well everyone that was involved in most of those names. In terms of examples of how and where that always works, I don't have them off the top of my head, Antonio. But in order to get there and maintain a strong capital structure, we look to minimize or control who gets into our stock in a meaningful way. So we try to maintain really strong investors that will be supportive as we look to advance the story. We look for assets that have minimal real risk identified, and that can be permitting risk, that can be geological risk, metallurgical risk. So we look for de-risked projects as much as possible. And look for good people. We hire good people. We pay them well, and they're dedicated and focused to make this company succeed. So I think those are the three main criteria that you as a company can use to minimize the chances of failure and minimize dilution as much as possible. And don't forget, if you're actually making money, free cash flowing, revenue generating, in and of itself is minimizing dilution, right?
Well, but in the same time, you also have to run the company. So maybe that's a good question too. How do you balance this though? I mean, it sounds like a very sensible business decision to ramp up revenues, start generating free cash flow, and grow using that cash flow, use that for exploration and whatnot, cover your G&A. How do you balance the focus between being a decent producer, generating cash flow and a sustained, and mining is hard enough on its own, but you also want to do a good job of exploring, which again, it's not easy, even for the majors that have virtually unlimited budgets, let alone for the juniors. So how do you balance all that?
There's also the third, which is the M&A side.
Right.
This was again going back to Beaver Creek. So again, one of the reasons, like going to the conferences, is talking through this with smart people that pick up, just like you have done, on challenges and different things that we need to focus on. The answer is all three facets, in my opinion, are equally important at this stage of the company's life. We need to be actively identifying new mineralization, because we can't afford to go buy big, beautiful deposits that are 2, 3, 4 million ounces. Just the price tag on them is just so much higher than we could afford at the moment. The production aspect is also, I think, quite important. It's not cheap to maintain a permitted site. We have 24/7, 365 employee coverage of our plant. We have to maintain a consistent flow going to and from our leach pad to maintain our permits for our ADR facility. You get, the nice thing is you get a little time pressure, because you're spending money. If you're not generating revenue, you're spending it for nothing, essentially. Yeah. And also, in terms of time sensitivity, I think that the M&A stuff is also important to look at now, largely because I think the market's still weak, and eventually anything with gold in the name is going to be worth 5x from where it is right now. I think if the gold market keeps trending in the way that it's trending. So I think all these different companies and Antonio are going to be lifted in the next little while. So I think you want to act rapidly on that strategy while there's such a big disconnect, especially when you look at sensitivity studies, I'm not sure if you've done this on many different projects, but particularly in gold, looking at economic studies that were drafted in the past 5 or so years, they oftentimes go up to about $2,500 as the dream case, best case scenario. When you look at the IRRs on some of these things and the NPVs on some of these assets at today's gold price, in contrast with the market caps, there's some really, really, really compelling opportunities out there, and willingness to transact from some of these different companies.
Yeah. The willingness to transact, of course, comes with having the right price stuck to it. What else is happening though in the meantime? You mentioned a couple of things about your currently ongoing 3,500-meter drill program. When are we going to see some news out of that, and what else is happening in the meantime?
So we've done a fair bit of drilling. Not a fair bit. We've done 15, 16 holes or so on two different portions of the overall project. One on that Graben sulfide deposit, and it's in our deck. There's some spectacular historical holes, but it's also wide open for growth. So waiting on some numbers there. And then, as I mentioned earlier, we've also done some expansionary and confirmatory drilling in and around two of the existing oxide deposits where we see growth potential, but also just some of the drilling from the 80s can't always trust, because they used what's called air track or air core versus our modern day RC or diamond drilling. So just testing some of those different things and making sure no contamination was present and included in the model. So hoping to get those results out in the next several weeks to a month or so, and we continue drilling going forward. So we should have a relatively steady state of results coming out going into the future.
Good. Well, we're going to be catching up with those results as they come out over the future. I think I've been through most of the basic questions about the story. What am I forgetting to ask you, though? What do you think is an important message that you want to relay about the Borealis story as it sits today?
We didn't touch on our board. I think that it's a really important thing for your listeners just to take a peek at on our website, just because we do have some of the preeminent mining people that have built and sold these big companies in the past. Also, our register, we talked about Rob McEwen. We've also got Eric Sprott there in a meaningful way. He wrote quite a big check into that 50-cent level, as well as a number of great institutions. I think that's a good first one here, Antonio. And we like I said, we can do a deep dive on geology and mining and all that fun stuff in the future.
Well, thank you, Kelly, for this overview. You are right. There's more to talk about, and we're going to talk about hopefully a lot more in the future, and hopefully do that geo deep dive, as I always like saying. But this is an interesting project. I'll keep my eye on it. Thank you so much for doing this, and hopefully speak soon. I'm letting you drop off now, though, as I am going to be going to France again. And I can hear you thinking something along the lines of, oh, didn't you just go there? And the answer is, yeah, I just went there 2 weeks ago on my way back from Ecuador to have a conversation with Dr. Keith Barron, the CEO of Aurania Resources. And he's back today because they've had some very important news for their projects in France. So no fancy 10-minute intro here this time around, as I just did that again 2 weeks ago. And Keith and I had a very in-depth conversation back then. So for anyone even slightly interested in this company, that's essential watching. But just briefly here, the company is listed as ERU, so that'd be ERU on the TSXV in Canada. They have gold projects in Southeast Ecuador and in France. And this conversation is going to be focused on France, but not on what you might be thinking, because we're specifically going to go to the northern shores of the island of Corsica. Because on October 3, the company announced that it had discovered nickel-rich beach placers, as well as they signed a non-binding memorandum of understanding with the Ogliastro and Nonza communities of Cap Corse, which again is northern Corsica, essentially allowing them to explore and exploit the heavy mineral beach placers, which are apparently highly enriched in nickel and other metals. How highly enriched, you may ask? Well, apparently a lab analysis of the concentrated of the concentrate that was produced by simply gold panning the beach. So just going out there like you would do in a river or whatever, gold panning the beach, they came out with a concentrate acid that concentrate, and that resulted in over 50%. So that's 50% nickel. That's not 0.5, it's 50. So the half of 100, 50% nickel, as well as over half a percent cobalt and close to half a percent copper in the same assay. So now the story of how much nickel could be concentrated in one place in this way and in this place specifically is too interesting for me to make you listen to my voice telling it. So why don't you do it, Keith? What exactly happened here? How did a nickel get here in the first place, and how did you know to find it even in the first place?
If you look into my background, a lot of the projects that I have worked on have resulted from ideas from archives. And that's what got me back into Ecuador. In this case, gentleman I work with, Stefan Anserme, found a report from the BRGM, which is the Bureau de Recherche Géologique de Mines, which is the Geological Survey of France. I think I said that right. And it was dated 1968, and it was looking at nickel at a place called Canary, which was at that time a producing asbestos mine. The mine started in 1920 and it went to 1965 and then it closed down. It's been closed ever since. And there's a mill complex there, which is going to get knocked down next year with money from the EU. Anyway, in this report, which was quite comprehensive, they were bemoaning the fact that the grade was low. So the grade of the rock that they take the asbestos out of is averaging around 0.2% nickel. And remember, I mean, this work started in 1957 and 58. And at that time, I don't know exactly what the nickel price was. It was probably something around 50 cents, 60 cents a pound, something like that, I would guess. And this was it was too much on the low grade side to make a difference for anyone. And most of the nickel at that time and still today is coming out of Sudbury in Canada. In any case, an order of magnitude higher in grade. In any case, they did a lot of work, and there was a one paragraph reference to a beach at a place called Albo, ALBO, and it said there was asbestos waste lying on the beach, and when the BRGM analyzed this waste, it was three times the nickel content of the stuff that came out of the open pit. So, I don't know what they sampled or anything. It's long, long lost in time. But in any case, um, I decided, this is kind of interesting because it's on the beach. What the hell is this? And I called up a Google Earth image and I looked at that. And anyone can do this today. Now, I couldn't see much on Elbow Beach, but the adjacent beach to the south, which is called Nonza, Nonza, I could see these black squiggles on it. And from my experience, and I have a lot of experience in heavy mineral recovery and placers and alluvials and all that stuff, I thought these looked like black sand placers, surface placers, beach placers.
Hmm.
And beach placers are quite common in the world. I mean, RTZ's exploiting one in Kenya for rutile. There are others that are being exploited for ilmenite, for titanium, and obviously off the coast of Namibia, people for 100 years have been mining diamonds along the beach and in the surf zone, where they've concentrated just because they're heavy minerals, right? So they concentrate, and there are a number of places where gold has been found, like in Nome, Alaska. Gold is there on the beach. It was produced for 30, 40 years. Now they're dredging just offshore the beaches. In any case, I relayed this information to Stefan. Stefan immediately jumped in the Jeep and drove all the way from Switzerland down to Marseille, crossed over in the ferry, and the next day he was on site, sending me photographs through his phone of the beach at Nonza. And sure enough, these black sands, these squiggles, were concentrations of black sands. Essentially, 100% black sand over, a width of maybe 3, 4 meters and going for maybe 10, 20 meters in a line. And then there'd be another one, and then another one, and another one, and another one. And, the way these are, you'll see them on the surface, but they're also in the third dimension. So they'll be vertically downwards as the beach grows. There'll be a number of these things. Uh, and so that was very, very exciting. He took a bucket of the concentrate off one of these black sand placers and he brought it back to Switzerland. And I live in Switzerland, so he met with me, and I took a gold pan and I had a big horse tub full of water in my front yard, and I panned this stuff. And I got a concentration of this silvery mineral. Where it was tarnished, it looks yellowish, and it's this mineral called awaroite. And awaroite is a natural nickel iron alloy. It only occurs in a few places around the world and not many places in abundance. But it's there, and it's also found in meteorites, and it's been known since about 1885. It was first found in New Zealand. So this is very interesting. I took a sample of this. The next time I went to Canada, I took a bag of this stuff and I took it to ACT Labs in Hamilton and in Ancaster, and I gave it to them, and I said, I'd like you to assay this well, they did a whole bunch of different elements, but I said, I suspect that it's very, very high in nickel. And they went, ha ha ha, what do you mean? How high? And I said, oh, it's going to be in the tens of percent.
Hmm.
And they said, well, we've never seen any natural material running tens of percent. And it comes back 50.4% nickel, right? Which blew the socks off everyone. And so this is very, very exciting because look, I concentrated this with a gold pan in my front yard. It's not exactly high tech. In fact, it's almost no tech. Not even low tech. It doesn't even merit that, right? So I managed to do this, and I said, well, gosh, if I can do this with a gold pan, certainly you could do this in a commercial operation. And the beach is immense. It goes for 1,300 meters, 1,350 meters long, and 350 meters wide. And thickness, I don't really know. I've got my ideas about that, but I'll share them with you some other time. Eventually, we will have to drill the beach, and we'll use a reverse circulation drill or a sonic drill and get an accurate number of the thickness. But because of this stuff, so the black sand is composed of two minerals. One is magnetite, which is Fe3O4, which is iron oxide, and the other one is the awaroite. So they're there in a ratio. I think it's pretty standard up and down the beach, and on the second beach as well. And that stuff that I panned, being 50% nickel. Uh, you could dry it, you could bag it, and ship it.
Hmm.
And it is suitable material to make nickel matte in a furnace. Boliden does it in Sweden. Outokumpu does it in Finland. And you can make stainless steel with that. You don't have to do anything else to it. Actually, the only thing you would have to do is add a little bit of chrome. And then you have stainless steel. So it is feedstock for stainless steel. Now, what we can do, and you said accurately that it contains cobalt and copper, and from what we can tell, those metals are intrinsic in the alloy of the awarenite. There's none in the magnetite, it's in the awarenite. So if we could get an awarenite concentrate, which approaches 100% awarenite, we can take that and we can do a process what's called hydromets on that and potentially recover those two metals. Now, I've done some back of the envelope calculations, and the cobalt itself, if we could recover 100% of the cobalt, that may pay the whole cost of mining. I really shouldn't call it mining because it's not. It really isn't mining. There's no drilling, there's no blasting, there's no excavation. It's just processing the sand from the beach.
Hmm.
We would not be removing the beach in its entirety. We would be taking the sand fraction. So the beaches are mostly composed of pebbles, rounded pebbles, and we would leave them behind.
Okay.
And the idea right now would be to use something like a, a cutter head suction dredge, the same sort of thing that they use to clean out harbors that have silted up, and around piers and things like that. It's a pretty standard piece of equipment. You lower it into the water. It's got revolving. They're kind of well, they're not exactly blades. They're blunt-ended pieces of tungsten carbide or tungsten steel. They're very, very hard, and they rotate, and they will cut into the bank. And any rocks, because there's a cage around this, the rocks won't be able to go in, so they're excluded. The only thing that goes in is water and sand. And the sand would be pumped up to a recovery plant. And that recovery plant, we would use both gravity and magnetism to recover the awarenite and the magnetite. Because
Hmm.
magnetite's worth money, right? This is very, very high grade iron ore, essentially. And the idea would be to recover them both and sell them both, right? And make money with it. And this is where maybe it's not dollar bills, maybe it's euros on the beach, but whatever. It's like found money. It's really amazing, and we've been working on this quietly for a year and a half with the governments, all different levels of government, the Corsican government, the federal government in Paris, the people who are dealing with critical metals, who are very, very interested in this project because they have a mandate to look for critical metals within the confines of European France. France has been getting a lot of its nickel from New Caledonia, and New Caledonia right now is in a bit of an upheaval with independence and independence movement, and the mines are shut down.
Hmm.
So there's nothing coming out of there. And Putin, just a little while ago, talked about cutting off all the nickel supplies to Europe, to the EU, because of the sanctions. And Europe gets 45% of its nickel from Russia. Almost all of it comes from one mine at Norilsk, up up near Murmansk. But they'll cut off the supply, and then that's that. So where is the EU going to get its nickel for electric cars and for a whole bunch of other applications as well? Nickel is a very, very important component, not just in stainless steel, but it's a hardener in steel, in different alloys. It's very heat resistant. It has a lot of applications.
Hmm.
It's used as a catalyst in some ways. It's used as a coloring agent in glass, all kinds of different stuff. But that would all go by the wayside. So, at the end of the day, I mean, this is not a never-ending source of nickel. It is finite and it's not huge. But potentially we can put this uh, thing into production. It would be cheap as chips to get it up and running. Um, I myself professionally have a ton of experience with heavy mineral recovery. Um, I own and operate the largest sapphire mine in the world, and that's in Montana in the USA. And we've been operating. This is year number 9 now, and it's sapphire has got a specific gravity of 4. We recovered gold as well with a specific gravity of 19. White has a specific gravity, a density of about 8.6. And magnetite's got a density of about 4.6, 4.3, 4.6.
Yeah.
So these are much heavier than your standard sand, silt, rock fragments, whatever, and certainly much heavier than or denser than water. So they can be recovered by standard panning techniques, gravity separation, using jigs, using well, we're not going to use sluice boxes, I think, but maybe Reichert spirals, there's all kinds of recovery equipment that you can use to do this. Um, and but I should backtrack a little bit with the story about the asbestos mine. So in 1948, they made a decision to throw all of their waste after they had taken the asbestos out of the rock into the Mediterranean. And they did that right up until the mine closed in 1965, and they covered these cliffs completely with asbestos waste. It went down into the water. The rain washed it down into the sea as well, and then over time, it has migrated through wind and tide and through something called longshore drift as much as 6 kilometers away from the mine site along the coast. And it's filled in these 2 harbors, the harbor of Nonza and the harbor of Albo. Before that, you could draw a fishing boat right up to the rocks and moor it next to the rocks at both localities. But both of those harbors have been completely filled in with this asbestos waste. The the action of the waves and everything really has acted on this like an attrition mill, like a ball mill. So this stuff, which was all really sharply angular fragments that were thrown into the water, are all now rounded. The edges have been knocked off it, and a lot of it has been converted into sand, just through the action of the waves and the tides and the storms and everything else breaking it up. So that's the stuff that we're interested in. They're little grains of 1 millimeter, and they have no adhering rock to them. So what they are essentially pure Aurania nickel iron or pure magnetite, which is iron oxide. Nothing else.
Hmm.
And so you don't have to go through a grinding operation. Uh, you don't have to do any extreme things to separate stuff. And the asbestos itself is gone. So there's been all kinds of tests done on these beaches by the French government to see if there is an asbestos hazard where they'd have to put signs up and put a fence around it and keep everyone off. The asbestos is gone. So asbestos is very brittle. It's only about the hardness of a fingernail. And when it went down into the sea, it got pulverized by the rocks right down into dust. And then we think that it's just essentially, it's become soluble and it's gone. It's dissolved into the seawater. And so it never made its way to the beach, and the beach is not a hazard. It is, there's not going to be a problem extracting the material from this and recovering the metals. It's a pretty standard operation, and in fact, the French government, the way that we're designing all this, is as a sand and gravel extraction operation
Okay.
for
So
aggregate. Yeah.
there's loads to touch upon in there, and I like the
Uh-huh.
story. It was very in depth, and we have to talk about many of these things that you just said here, Keith. But given that it's not the Aware wine is not native and it has been transported to there, as far as I understand it, how do you know it's not? How do you know it's not just a kind of a small occasional concentration of nickel as opposed to a mineable deposit over what you call a 6 kilometer strike, essentially?
Well, we're only going to look at the beaches. We're not looking at 6 kilometers. But in any case, we've done traverses up and down the beaches, and it's consistent. It's everywhere. Um, it's not. Why would it just be confined in the patches? It's not confined in the patches. This stuff has moved 6 kilometers, and it's been completely homogenized in the process. It's all been broken up, and now what we don't know, and we won't know until we drill, typically in um, an alluvial operation, which could include a beach operation, you will have a concentration of heavy minerals on the bedrock, right? So at the very, very base of the beach, you'll have an accumulation of, in this case, probably magnetite and awarenite. We don't know, and we won't know until we actually drill it and recover that material right at the very bottom. But I suspect that there's going to be maybe a meter thickness, um, pretty much everywhere up and down, which is just essentially 100% heavy minerals. We will see in time, but comparing it with other things, this is not an accumulation of sand and gravel, which is hundreds and hundreds of meters thick. It's fairly thin. And I think when there's a storm, a big storm that rolls in, um, it's probably pounding everything, and the whole. Um, what happens is that you get the whole sedimentary section, which is unconsolidated. It vibrates, and it vibrates and it shakes, and the heavy material will fall through the interstices between the pebbles, and it will go down, 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 down until it hits something that's resistant. In this case, it would be the rock at the bottom, and then it would accumulate there. And that's why, in a fluvial sense, you see lots and lots of situations. The California gold rush, they wanted to get down as deep as they could in the gravel, right down to the bedrock, because that's where all the gold resided. There was some up above that, but the bulk of it would reside on that bedrock.
Hmm.
So we'll see. It'll be very, very interesting.
And oh, but so this might be a silly question here, but something you just mentioned there made me think about this. What about longshore drifts or tidal activity or storm activities? Can they kind of wash it away or influence the concentration of the heavy minerals in specific zones along the beach?
Well, it seems to be getting the trap is the harbors, right? These are kind of like crescent shaped, and it hasn't moved any further south.
Hmm.
So there's none. That's the end of it. So it's been a very effective trap. For whatever reason, I don't know, maybe things are kind of refracted around headlands and the currents and the tides and whatever, but that seems to be the trap zone. Longshore drift, a really good example of longshore drift is Cape Cod. And you see the sand. Cape Cod is entirely composed of sand, right? And it's going right out into the Atlantic, and that sand has been dragged out and deposited by the wind and the currents, the prevailing currents in that area. Excuse me. Same sort of thing has happened here to move this from south or from north to south. Now there is nothing, and it's been verified already by other people. There's nothing north of the mines, nothing north of the mines.
Hmm.
So all of it has traveled south, and it's kind of like a holding place. That's where it's accumulating, and it travels no further.
Hmm.
So yeah, so that's it's a very interesting scenario. Um, this kind of thing has happened in many, many places around the world, but not in a situation where you have a beach that is essentially artificial, right?
Yeah.
And there are other places around the world where, like off the coast of South Carolina, they have a problem all the time with the winds and the tides taking the sand away. And so they have to put these wooden dividers in. They call them groins, or they have to back the houses away from the tidal zone because the tide's very effective at moving that sand away. So it's a very, very dynamic thing, and it's acted in this case for over 50 years, and it's a very, very intriguing phenomenon.
Hmm.
Now, I might just add, because people are going to ask me about this, and so, well, what about the beach and the tidal zone and the fact that it's marine? And aren't you going to interfere with the ecology of the area?
Hmm.
The beach is entirely sterile. There are no crabs, there are no shells, there are no clams, there are no limpets, there are no barnacles, there is nothing. And the reason being because nickel, chromium, and cobalt are leaching out of the material. This has been documented. It's found in the fish just offshore, which are getting close to the level of where they would be dangerous to be consumed.
Hmm.
So this is not a natural thing. All these invertebrates that would normally be on a beach have been poisoned. They're not present. And so we're not interfering with any marine life. In fact, we're cleaning it up. We're cleaning up the mess. Um, you know, a rock pebble, let's say that it's this size, the volume to surface area ratio is very different from the volume to surface ratio of a, a speck of sand,
Hmm.
where the volume to surface ratio is very high. So what that means is that there's a lot of surface area that can be leached by the salt water, and the metals come out of it and they end up in the water column and they end up in the wildlife. So the most dangerous component of the beach is actually the sand, not the rocks, not the pebbles, but the sand. Eventually, over time, all those pebbles are going to go, they'll get worn down to sand, but that might be 100 years from now, right? So, a certain component of this sand is material that was actually came out of the mill uh, during the asbestos mining, and through the crushing process, it was made into sand and it's just traveled. And then other parts of it are just rocks that have been completely obliterated and reduced down to tiny, tiny grains now.
Hmm. But so there's no areas of active sedimentation that continue to add to the potential deposit. Like it's done, it's there, and that's it.
No, actually, there are some streams coming down off the hills,
Okay.
and they carry heavy minerals as well. And that's perfectly natural. That's been happening for tens of thousands of years, if not even more.
Okay. And then essentially though, you now have to drill it? Like that would be the next step for you. You actually have to go and do RC drilling. Any timelines or anything that you can give me on that? When you want to drill it? How much? How much it's going to cost?
Don't know yet. Don't know the thickness. You asked me about Ecuador as well. I don't know.
Yeah.
So, we're in the process now of looking for providers, and we've got somebody lined up to do the environmental study, and they'll be contracting all this stuff. We'll be involved, obviously, but we're trying to hand off as much arm's length as possible. Now, people might be skeptical about this whole thing that we're doing here. And I thought about it and I said, God, I wouldn't want somebody saying that we're pulling a Brex on this or something like that and insulting and that. So I engaged SGS Labs, which is the largest laboratory network in the whole world. And they have sent an independent geologist who has gone to Corsica and done their own sampling and their own due diligence, really, to check it all out, that everything that I've been saying here is true. And shortly they will come out with a report which will make public.
Hmm. And that's when we're going to know, I suppose, more about how you want to approach, because again, there's many things that I wrote down kind of when I looked at it. I was like, geometry of the ore body, thickness, lateral continuity, grade variability, and stuff like that. There's there's not much that you can tell me about that right now.
Well, all I can tell you is what we've sampled up and down the beach, right?
Hmm.
The Long Beach in Nonza, for 1,300 meters, and we did a composite from one end to the other. And but it's early days. I don't want to go ahead and start throwing numbers at this. But it's respectable. Let me put it that way. And certainly something that would be potentially commercial.
Yeah.
Otherwise, I would have given up, right, and walked away from the damn thing. We've been at it, as I said, for a year and a half now. Um, we took 130 kilos of magnetic sand, so not all the sand, but just a magnetic fraction, which we collected with a samarium neodymium rare earth magnet. And that went to SGS labs in Lakefield, in Ontario, near Peterborough. That's one of their main labs in the world. That's where they do a lot of beneficiation work. And so they have been working on this to figure out the most effective way of recovery of the awarenite from the magnetite, the separation, and to see what steps they have to go through and what kind of equipment that they have to use. This is essentially a benchtop type exercise, and then we would scale it up
Hmm.
to a pilot plant. Maybe we would get them to do the work, looking at maybe 100 tons or so of material, and running that through, and then scaling it up from that would be a production plant.
Do you, are you going to follow sort of the traditional MRE, PEA, PFS, FID path, or can you kind of skip that and go into mining on the back of the scoping study or the MRE?
Don't know yet, and it'll be dependent partially on the regulators and partially on the lawyers, right?
Hmm.
Um, Now, my experience with alluvials, if we go ahead and we start drilling this thing to create a resource, might cost as much as the production plants.
Hmm.
If you can believe it, it will. I think the smart thing to do is to drill a number of holes, but not exhaustive, and we get quite a good idea of what's going on, and on that basis, we decide yes or no for a production decision. But you can end up going down the rabbit hole here very, very quickly and spending a ton of money remember, this is not an alluvial operation is not a sort of operation where I'm going to have a plant that's going to cost 100, 200, 300 million bucks, right? This is going to be a modest amount of money comparatively. I mean, you can take a zero off of that, and you'll come up with a more or less accurate number. So, if you get bogged down in time and in money, because it takes a lot of time to create a 43101 resource. Now, I'll give you an example of where this gets silly, right? And we'll go back to Fruta del Norte, which my former company Aurelian had in Ecuador. Uh, Fruta del Norte is full of coarse gold, right? And so it has a pronounced nugget effect. And we brought in three different international consultants to look at the thing. We had already drilled it on 50-meter centers on 100-meter spaced lines. And that thing was 1,300 meters long, right?
Hmm.
So they came back to us, and if I remember rightly, one of them said, you've got to drill in a pattern every 35 meters. Another one said every 30 meters. And the most conservative said every 23 meters, you have to put a hole into the thing, right? So here we are, a little junior company, and the cost is 150 million
Hmm.
to put a resource together, right? 150 million bucks because of the nugget effect. And that's how silly it gets. So Kinross went ahead and spent that money, but you think that my little company, Aurelian, would have been able to do that? We would have been diluted. Our shares would have been 5 cents. So this is where it gets silly, right? It was very, very obvious from everyone looking at this that it was going to be economic. I mean, if it had been discovered back in the 1920s or 1930s, they just would have had at her and started mining. And instead of blowing several years and over 100 million bucks defining resources simply to pleasure a bunch of investment bankers and the regulators, right? It was obvious to anybody that it was going to be a mine. And this thing, I think, is obvious to anybody that it's going to be a mine as well. So, we will be very, very professional in our approach here. But, my Sapphire mine in Montana, I have not drilled it to the nth degree. It's private, so I haven't had to deal with any regulators there. I put a bunch of drill holes down into the gravel, and I got more or less an idea and know that it's going to be economic. It's not economic everywhere, but most of the places it is. And that's good enough, right?
Hmm.
A lot of cases you really don't know what you have until you do test mining and get the recovery. And if you're already in test mining, well, you might as well just continue on, right? So this is. I don't want to be critical of 43-1 in the process, but it's 43-101 is fine for something that's 1 or 2 grams and consistent across a project. But in this case, um, because the entry level to the project with the cost of the plant is so low, you can end up blowing a lot of money and spending as much to create the resource as it would to be actually to mine it.
Hmm. And you're talking essentially about a simple dredging operation here. How
Yes.
stable is the coastal environment here, though? And can it really carry a large enough operation? Well, a dredging operation.
Well, it's completely unstable. It's unconsolidated material.
Hmm.
So every time there's a storm, it changes the beach. Um, but what you do, you put the cutter head, you sink it into the water next to the slope where it's here's the beach and it's coming down into the water, and you kind of dig into the beach, and the material cascades in. It gets sucked up the vacuum system, and then it gets pumped to a plant. In this case, the plant will be about 1,000 meters away. And at that plant, we will recover stuff that's maybe 5 millimeters. And in the plant, we will screen it down so that we have material that's only 1 millimeter and smaller. And then that 1 millimeter and smaller material will go to the next stage.
Hmm.
And that will be gravity recovery and magnetic recovery.
I'm glad you're mentioning the changing of the coast essentially, because it's also something I wanted to ask about the geomorphology of the coastline. How is that going to influence your plans here? I mean, I assume it's doable from what you're telling me here, but does it make it more challenging to plan around it?
I don't think so. I don't know. You know, the beach has been there for a lot of years now, and if anything, it's been getting wider as more and more material is kind of dredged up naturally and piled up um, onto the shoreline. Um, yeah, I don't think it'll be a big deal. I mean, at the end of the day, what we'll do, um, any excavations we have, we will grade it down with a bulldozer. And the first winter storm that comes through will modify it so that it will look like we've never been there.
Hmm. Yeah. Yeah, exactly. And then essentially come time to sell what you're producing there, you're going to be selling what nickel concentrate essentially, right?
Well, there's two things here. We can either just recover the nickel and the magnetite together, and that would be a potential feed for a nickel matte furnace to make stainless steel, right?
Mhm.
Or we can extract the aware so that we have 100% aware con, and that would be value added, of course. And potentially we could extract through hydromets the cobalt and the copper that it contains, and we get them as valuable byproducts.
Hmm. When you have to send it to a smelter, are you going to have to find a special smelter to send it to, given how high grade that is, or can just anyone deal with this?
Anyone can deal with it. There,
Hmm.
there would be lots of people all around the world, but because of the location in the EU, um, as I think I said, Outokumpu's got a steel plant, a smelter to make stainless. So does Boliden in Sweden. And then Sibani-Stillwater has a nickel sulfate battery plant in Normandy, in the northern part of France. So there's three potentials right there,
Hmm.
and there's others as well. I think it makes a lot more sense to send it somewhere locally rather than paying horrendous shipping charges. I would much prefer for lots of political correctness reasons, to have it sold in Europe rather than sending it to China, and or to Russia. So yeah, no, that would be the idea. So there's a number of consumers potentially in Europe who could take it.
The nickel is concentrated, though, as you mentioned in Aware White, which is kind of to repeat on what I wrote down. Oh, first of all, it's not found as often in nickel deposits. It's typically sulfides or laterites, as far as I know. But so
That's
essentially,
right.
this
Yeah.
is a nickel iron alloy, and so
Right.
a lot of nickel. It's a high 70s, maybe 80% concentration of nickel, and
Yep.
the rest is iron. Is that going to make it tougher from a metallurgy perspective in any way, or can you just deal with it?
Nope. Just melt it.
Okay.
Just put it in the furnace and melt it.
And
Very, very
and
simple. Yeah.
those would be so your smelters. That's what you just. I mean, there you go. You want to send it in the U. And the final product as to what they're going to get. from the Aurania, will the end product be battery grade nickel in this case?
Well, to make battery grade nickel, you would have to dissolve the mineral and change it into a liquid form, and then get any impurities out of it. So in this case, you would have to get the cobalt and the copper out of it, and the iron, and just precipitate the nickel. And it's a fairly simple process. Um, and then you can make nickel sulfate, and the nickel sulfate would go off uh, for battery production.
Okay, so essentially it is. I mean, it's doable from Aurania to battery grade nickel. That's doable.
It's actually a lot simpler than taking pentlandite, which is the main ore mineral from Sudbury, or taking nickel laterite, where the nickel is concentrated in clays. You have to go through multi steps, and it can be very, very polluting. For pentlandite is a sulfide. You've got to drive the sulfur off. You got to get rid of it somehow to make nickel oxide, and then the nickel oxide is reduced to nickel metal. Um, but you have to go through multi steps, and this is clean stuff. We're not going to generate any pollutants from it. It's about as clean as it gets. So there's nothing in there that's going to hurt the environment. There's no sulfur in it. In places like Indonesia or Sulawesi right now, they're clearing rainforest to mine lateritic nickel. It is a huge environmental. It's an environmental catastrophe. It's mostly Chinese companies that are doing it, and it's very energy intensive to change the nickel laterite into nickel metal, and it's very polluting.
Hmm. Do you have any examples of comparable operations hosted in Aurania, and then even if we could get even more specific, that'd be better. But operations that are located on a beach and hosted in Aurania, does that even exist?
No, no, there's nothing on a beach anywhere in the world. This is a rare mineral. It occurs in maybe 15 different places. There is a company that's on the TSXV called FPX, which has an advanced project. It's a project that's been known for many years. It's in northern British Columbia, and they're going to be mining hard rock. It's around 0.22% nickel. The nickel mineral is mostly awaroite, and they will be extracting and recovering awaroite. But they have to do a lot of stripping to get down to it, and it's a big capital cost project. There's not a lot of infrastructure there, um, and it's really a very different beast from what we're looking at.
Hmm. Well, let's talk about permitting in that case, given that it is so new. You've just signed this MOU, but essentially you're gonna go and excavate a beach in France. Sure, it is Corsica, so not
Yes,
mainland France, but it's France.
yes.
I mean, who has to give you the go ahead? So, what would the permitting process look like? Any idea of timelines and how doable it is?
Well, it's France, and there's a lot of bureaucracy, so I can't give you a timeline because we simply don't know, and nobody's done this before, right? If this was a natural beach, it would be a very different scenario, especially if it was a natural beach with a whole bunch of I don't know, a whole bunch of habitat where small fish or fish are laying their eggs and developing in the offshore environment. There's nothing like that going on here. We'll have to commission some studies, but there have been studies done already by oceanographers who have looked at this thing, marine biologists, and it's a dead zone. So from that point of view, it's a lot simpler than potentially other places would be. Um, you know, It is in the water. Fortunately, there's no clay component to this. So when you wash it, you're not generating a lot of turbidity in the water from clay, and clay being in suspension or anything like that. If there was any clay, it's been long ago winnowed away from the area just by the tides and the surf and all the rest of it. So all of that is gone. Um, it's about as simple as it gets.
Hmm.
So timeline, I really don't know. I mean, look, if everything was to gel, to put it together and get it into operation. And I'm saying, if we had all the permits, all the permissions, and everything else lined up, it would take about a year.
Okay,
Um,
that's an aggressive expectation right there.
yeah,
What do you don't think there's going to be any environmental pushback or anything? Like there's no, you said the beach is sterile, so I assume there's no local fishing on the shores or anything like that.
no, no. There's
Hmm.
no fishing from the beach. There are fish in the water offshore, but we know that they're already contaminated with heavy metals because that study's already been done, and we'll use that study as part of our our environmental plan. Uh, is there going to be pushback? I don't know. I don't know. I mean, we've got support of the local community. They stand to get a royalty out of this from the governments. And it would be a win for them. It's not like we're destroying their beach and moving it away. All the pebbles are going to be excluded from the process, and they're all going to be still there.
Hmm.
And the major component by volume of these beaches they're pebbles, right? Rounded pebbles. So they're not going anywhere. They're just going to stay there, and we're only extracting the very, very fine fraction. I told you before I'm going to do a little bit of a parlor trick on you here. So this is kind of interesting. I have in here in this little bottle, I've got some concentrate from the beach, and in this plastic bag, I've got a fridge magnet. So um, I don't want to make a big, big mess all over myself here because some of it's going to drop off. But here we go. Look at this.
Oh wow,
You see how magnetic it is?
what's that
It's
telling you?
ex it's extremely magnetic, so it is very, very simple to recover it off the beach. You don't have to go to technological extremes to do this, right? It's simple.
Hmm.
That's the same sort of thing that kids do in first and second grade science class with iron filings, right? Kids play around with magnets and iron filings. And this is almost the same sort of thing. It's very, very simple stuff.
You You also mentioned something about heavy metals leaching into the marine life here, and that's irrespective of
Yeah,
whether you're there or not, and whether it's being mined or not. It's just leaching because it is there, so it's just
yeah.
happening. But how would your
Yeah.
operations there influence that? Is there a larger risk of heavy metals
No, no,
contamination for
no,
marine life, or
no, no. It's not even larger risk. As I said, the sand grains, because they have more surface area than the pebbles, they are more prone to leaching of material, right? Leaching of metals. And we're going to remove all those small sand grains, right? We're going to take all the awarenite and all the magnetite. Magnetite's not a problem, that's benign. But the awarenite will remove almost all of it from the beach. That's sand size, and it won't be an issue anymore.
Hmm.
I can't tell you right now if marine life is all going to return to the beach. I have no idea. That's not my expertise. But it's not going to do any harm. It's not going to add asbestos to the beach in any way. It's not going to be, I mean, the whole thing is environmentally as benign as it gets.
Yeah. Well, good. Let's see what other news you have from here in the near future. What else I'm thinking though is about Ecuador. Does you having
Okay.
found this, is that going to detract from your focus on Ecuador? Can you still keep doing the work that you told me about 2 weeks ago in Ecuador and keep moving this forward at the same time?
Yeah. Well, I would have been from the land of the dummies if I this is like being kissed on the forehead by God, right? You don't find an opportunity like this and walk away from it because it's far, far too compelling. So, and I know that it's not a difficult project. It's certainly nowhere near as difficult as permitting an underground mine or anything like that, right? It's simple, 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 simple. I mean, I did it in Montana. I've got a plant running there that does it can do 200. It's rated at 200 cubic meters an hour, and it runs for about 8 hours a day, and it took me one season to get it in place and get it operating, right? Um, these are not complex things. It's not going to take more than uh, one season to get this thing in place, operating, dialed in, and producing. Very, very simple. So, is it going to detract from Ecuador? Well, I think personally, I've got the bandwidth to take this on. And it's at some point it's very, very early. It will not be in the hands of the geologist anymore. It'll be in the hands of the engineers, right? And I'm not an engineer. So, it'll be in the hands of the contractors and everybody else to actually commission the plant, build it, move it in there, and do everything that has to get done. So um, it's not going to be a big deal, I think. Ecuador, we are committed there. We're still going to continue to do the work. We've got uh, as I said a couple of weeks ago, we're cutting the lines over Curiaowi. That's an epithermal prospect. And the idea is to do an IP survey over it. And then in the first quarter of next year, we'd like to drill the targets. Presuming there are some targets, I'm pretty sure that they will show up in the IP survey, induce polarization, and we'll take it from there.
Hmm. So, what do you think the next news release is going to be? Is it Ecuador focused? Is it France focused? And what are you planning?
Well, there's not going to be any results coming out of Ecuador in the very, very near future, but I have a lot of stuff in process right now. As I said, that independent report that's being generated by one of the SGS geologists. So that should be available in, I don't know, maybe a week or two. I contacted him about 2 days ago and 3 days ago, and he said he's working on it. And we've got a whole bunch of samples at the SGS lab at Lakefield. We'll be generating some news from that. It's not like this is it, and you're not going to hear any more from us for 4 months. There'll be more or less a continuous news flow from this thing. I think at maximum every 2 to 3 weeks we'll come out with some news, but probably a lot shorter time frame.
Well, you did note that the mapping program at Awacha is now completed with one of your last news releases. How did that go? What
Yeah.
did you find? Are you happy with the outcome?
Yeah, we found a number of places where there are high level dikes and sills. A sill is flat lying, a dike is vertical of igneous rock that's been altered in some way. So sericitic alteration or biotite potassic alteration, which is what we want to see. Um, Next month, we're having the international expert who's done some work for us, Steve Garwin, is going to go to site and have a look at what we found and give his considered opinion. He was the guy who was responsible for the discovery at Sol Gold in the northern part of Ecuador, Cascabel, which is apparently going to go ahead and be a mine. So he's a very smart chap. He's been around porphyry coppers for pretty much all of his career, and we'll take the lead from him. So I am not a porphyry copper expert. I'm more of a gold expert myself. That's where a lot of my expertise is. And yeah, so we'll follow up on that. But at the same time, we'll be looking at Curiawi and seeing what comes from this survey.
Hmm. But
Maybe in the line cutting they'll find something as well. I don't know, but we'll have the geologists walk the lines when they're done, and it could be very possible that something shows up in that as well.
but as far as the Watcher goes, it's still looking like a porphyry, right? And is there any other
Oh
porphyries that you would
yes.
compare it to?
Well, um, all the ones that have been found in Ecuador. I mean,
Hmm.
we know that it's mineralized with both copper and molybdenum. Um, We find alteration on the surface. We've seen the copper veins, chalcopyrite, covellite, chalcocite. All the copper minerals are there. Molybdenite as well. It's pretty standard. It doesn't outcrop very well. Most of it's covered by a layer of mudstone, but where the creeks have cut down through this mudstone and into the top of the system, you can see the igneous rock underneath it. The porphyry is exposed. Now, um, we're focusing on Curiawi right now because Curiawi is next to a road. We don't have all the money in the world right now. So we're focused on that because it has road access. It will be quite cheap to drill it. And Awacha will be a helicopter supported operation. We do not have the money for that right now. So we're focusing on Kiriawi, and because I think, um, corporately, this is going to give us a bigger bang for our buck.
Hmm. Okay.
And I
Um,
love the place where it is right now.
well, you've probably been getting a lot of phone calls on what's happening right now, and kind of potentially with comparable questions to what I'm asking. What are your current shareholders telling you about what's happening, and kind of your focusing, well, acquiring a new focus on nickel? What are people telling you about that?
Well, the share price is up 20% since we made the news. So there you go. Most of the shareholders, in fact, I would say 100% of them that have been contacting me are very, very happy. And they're saying, go with it. Uh, we want to see, they all want to see a fairly continuous news flow coming out of this. And they would be extremely happy if we were to put this into production. Uh, and probably even more happy if we were to pay a dividend at some point. But that's way, way down the road, right? That's way down the road. So, but for now, get positive news coming out of it, positive news flow, and move the thing ahead.
Hmm.
The Ecuador story, we've been there for a long, long time, but over the last 2 years, with just the Ecuador story, our share price dipped as low as 17 cents. We've been in the last month as high as 71 cents. So we're way off the deck, and it's time to regroup and rebuild. So that's what we're doing here.
Hmm. Are any of them, because you're right, your stock price is up over the last week plus, but are you hearing anything about any of them exercising any warrants? Because I think some of them are already in the money with this move, right?
Well, yeah, the last financing we did was at 20 cents with a 45-cent warrant, and they're all way in the money right now. And we have warrants which are coming due in in November and December at 75 cents, and we're not too far away from them as well. And yeah, it would be great to have some money coming in from that rather than me having to go to the brokerage community and high net worth individuals and all the rest of it and selling the story. But you know, it's great to have the story relayed through gentlemen like yourself who are very knowledgeable about the mining business, and because you know that lends a lot of credibility to what I'm doing. And you know, I wish well. Maybe it's not a good idea, but if we cloned you about 10 times and spread you all over the internet in different different outlets, um, maybe our share price would be $2 or $3 by now. I don't know. But there are people who do what you do, who uh, are promoting things that are obvious pump and dumps, or they're lifestyle companies or whatever, and they're really no hopers, and they're getting a fat fee from it. And but you know, we're certainly a legit operation. The last financing, I put $2 million in it of my own money,
Yeah.
and I own 44% of this company. So if I'm right, and if everything comes to pass here, I stand to make a great deal of money, and so do the shareholders, and that's what it's all about.
So, given that you put money into the last financing, I suppose your main goal would be to raise capital at a higher price, which again, given that you raised at 20 cents, shouldn't be too complicated to do right now. When is the right time to go and raise capital? I think I asked you the same question last time, but now with this positivity in the share price, is that time anytime soon?
Well, we don't need the money today. Of course, you know, they call junior companies burning matches because we're always needing money, because you know exploration is expensive. But you know, we will do a financing at some point, but certainly I want to do it at a much higher price than today. And it's my job to get that share price up so that we experience as little dilution as possible.
You are going to two European conferences late next month, though. And that's part of
Yep.
the job that you're doing there is telling that story and trying to get new people interested into it. What's the main message you want to convey there? What's kind of the strategy for tackling them? They're kind of back to back too, I know. So yeah, talk to me about that.
Yeah. Well, we'll see what kind of news we have on this thing, on the Corsica thing by then. And I expect we'll have some more out. You know, we've got the balance of October and a good chunk of November. I'll be doing marketing in the US as well. And, you know, I want people to be aware of this project. Um, I think that well, you know, at the end of the day, the investors are there to make money, right? And I think this has got a lot of upside. We've got um, a lot of information to come. Um, but as you know, for an hard rock mine, if you were to make a discovery today, in North America, well, in the US, you're probably looking at 18 to 19 years before the thing gets in operation, right? And so there's a number of projects, all kinds of them in the Western US, and the Eastern US as well, but a lot of them in the Western US that people are drilling, and good luck to them. But at the end of the day, it will be a long, long time before these things see the light as producers, if they ever do.
Hmm.
And you know, I'm familiar very much with the Lassonde curve, as you probably are yourself. And what happens is that companies, um, they make the discovery, they climb in share price, and then they hit the doldrums for a long period while they're commissioning the mine, building the mine, and then when they start producing, they shoot up again, right? But the reality today, the reality in 2024 is that between discovery and between production and production, you're going to get whipsawed by the markets. You're going to have many, many changes in politics, in the politicians who are running the countries, local politicians, whatever, and you ain't gonna get to production. The people who make the discovery, this is not like the old days, like the 50s and 60s, where you make a discovery and you build a company, right? Those days are gone. Because in a moment of weakness, if you have a project that's any damn good, somebody is going to come and they'll take you. It'll either be a hostile or a friendly takeover. And we've seen a lot of M&A activity just in this last week, but you're not going to get to production.
Hmm.
So that is the unfortunate reality today, because the timeline gets longer and longer and longer especially in North America. People say to me, "Oh, it's great to be in North America because you have the rule of law and everything." Well, you have the rule of law, but every time a project and Resolute in Arizona and the Pebble Mine in Alaska are cases in point. They attract lawsuits, and you'll end up in courts for almost forever, and the thing can't get through the starting gate,
Hmm.
and that is the problem. It's something that has to be fundamentally fixed, but for whatever reason, the politicians don't see this as a problem. I see this as a massive problem in the industry. And the barriers to get to production are just too high. But no. So in this case, I'm saying here, if we had all the permits lined up, we could, in terms of construction and transport and assembly, we could get this going in about a year,
Hmm. That's
which is
beautifully put.
fraction of the time frame of a North American hard rock producer.
That is again beautifully put, and unfortunately, you're very correct. The average timeline to put something into production from discovery to production is 29 years in the US. Second longest
29 years,
development, yeah,
yeah.
second longest development
I,
time frame in the world.
I'd be dead before that happened. I'm 62 years of age.
We'll figure it out by then. You're not going to be dead, but no, good, Keith. This has been great. I went through all the questions. What am I forgetting to ask you though? What is something that you had hoped we'd talk about, but I'm not bringing up here?
Gosh, I think you've been pretty thorough.
I tried.
We've gone through everything. I've done my parlor trick with the magnet. No, there isn't much else to discuss here. Just to say that anybody who's viewing who has any questions, they can email me directly. My email is Keith at Aurania, AURANIA.com. And also they can look at our website. So, and I do get back to people. So anybody's got any queries about this, fire away.
Awesome. Well, this is a great way to end the conversation, Keith. Thank you so much for sitting down with me today. You'll have your credentials on screen right now so that people can see it and contact you if they have any questions. But again, thank you so much for doing this.
Thank you. It's been a real great opportunity. Uh, all this is going to be a lot of fun.